Yeah. 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 Always had a way to make it work and find another route. Always had a way to make it work and find another route. Always had a way to make it work and find another route. Always had a way to make it work and find another route. Yeah. Yeah.
What is good? What is good for the culture family? Yeah, I definitely like this angle much better than the angle we was looking at yesterday. But how are you guys doing? I hope everybody is doing absolutely fantastic today. Um yeah, let's dive right into it. So we're going to be talking about CPI data. So if you can see here on my screen, if we come over here to the calendar, you see that in about 30 minutes from now, 25 minutes from now, we have CPI data coming out. So for those of you who don't know, CPI is the, let me see, it won't let me click on it. Ah, man, it's not letting me click on it. Well, it's okay. Anyways, it's a high volume news event. It's high volume. Now, there's 4 major news events, and this is one of them. So you have PMI, you have FOMC, you have CPI, and as we seen last Friday, we had NFP. So for these high volume news events, what we want to do is we want to execute on the after the release of the news. So after the release of the news, after we get the direction and the structure, then we'll look to scale in for a continuation of whatever that volume is on that side there. So let's take a look and dive into the charts. All right, so for EURUSD, and since we have a little bit of time here, let's take a look at what's going on. So currently, it's looking like we could get a steeper sell move to the downside. That's what it looks like initially. Now, granted, the news comes out in 30 minutes, but if you're looking at the previous 4-hour candle closed bearish, current 4-hour candle is bearish. It looked like it already took the liquidity up above this high here, and price could potentially fill this to the downside. You got to understand that we are currently in a bearish market structure. The current daily is in fact bullish. So last night for the Asian session, this was our candle, a 4-hour candle that had closed. So it closed bullish. So we were anticipating the session to be bullish. Now, in terms of where the price had went yesterday, it went to that targeted level that we were looking for. So we remember that initially we were saying that we wanted to see a flip of that previous 4-hour candle that we were looking for yesterday to come back down to break the previous 4-hour low, and then break also the previous daily. So let's go to the 4-hour so we can show it. So you can see that previous 4-hour low is what we wanted to see get broken right here within this candle yesterday's session, and price pushed down. And then we talked about in this session where could price likely reverse off of this level here, and why this level here is because that was our next immediate level of resistance. And so what did we see last night for the Asian session? Well, price came and closed bullish here, and then it began to push up during the session. Now, I wasn't able to actually capitalize on this move, and that's because it was a complex structure. So if we take a look on the 15-minute time frame here, you can see that price is clearly creating lower lows and lower highs within this channel here, right? We came down to that key daily time frame level, and then price pushed up, it pushed down, and it kind of sat here. And so then the 4-hour candle closed bullish within this corrective structure. So hindsight is 2020. Everything looks good in hindsight. Let's go to where price was at. So we're taking a look at this here last night there, or I'm taking a look at this here last night during the Asian session, and I'm like, okay, the previous 4-hour just closed bullish. We're at this key level of resistance. Mind you, we had very, very little volume, but we was at that key level of resistance. Just like, all right, if I see a change of character, and I'll look to get in on buys. Now, why I didn't want to get in on buys, because you can see here that price had created a high, it created a low, created a new high, but then it broke that previous low. So now it's like, okay, we're in a larger time frame bearish structure. Though the 4-hour time frame closed bullish, this structure at the time appears to be a corrective structure. And if this breaks this low, it comes to retest here, we could see a steeper move to the downside. So it was like this was a conflicting thing for me. So I'm looking at it, and mind you, the volume was relatively slow up until. So we go through, price is pushing up, It drops down, you can see, and it comes through and it takes out this low here, if I'm not mistaken. Boom. So it just took out this low. So when it took out this low, it's like, okay, no, we're starting to see a change of character, because, you know, price pushed down, broke through this low here, corrected back up, pushed down, pushed through this low, came down. So it's like, all right, well, even though we know the 4-hour candle closed bullish, so it's like, this is what I mean when it was a complex structure, because even though our larger time frame was showing signs that price should be bullish, the smaller time frame was showing signs of a move down. Now, what did we see happen after that? Price rejected off of this level, it pushed up, corrected down, started to make another what appeared to be another move to the downside, and then at the 10 o'clock candle at 10 o'clock at night, oh, no, 2100. So yeah, it's like 10:15, 10:20 after the 10 o'clock 1 hour candle started last night. We had got an immense amount of volume that went up and pushed for this high here. Now, initially, let's walk back through it. The previous 4-hour candle closed bullish, and we closed bullish at this key resistance level here. And so we were initially looking for a corrective structure trade. That's what my goal was, a corrective structure trade to scale in on this move to the upside. And all I was going to do, how I do all the corrective structure trades, is I was looking to target this high here. That's all I was going to do, is I was going to target this, or not this high, but this level of supply here. And that was going to be our target, because price could flip from this level and continue pushing bearish. That was back when the candle closed bullish here. So we closed bullish here, but then it grabbed liquidity below this low. And I told my brother that, you know, it was a complex structure, but if we do look at it on a 1 minute time frame, if we take a look and how we can prove, and what this move to the downside was simply a liquidity grab. That's all it was. It was a liquidity grab to clear out people who had taken buys in this area, because after this liquidity grab, what happened on the smaller time frame? Well, technically price was creating within this wave here lower lows and lower highs. There's certain things that we need to keep in mind. So our previous 4-hour candle low is here. So this is our previous 4-hour candle low. Our 4-hour candle closed bullish, right? We get a liquidity grab there. But then what happened? We got a change of character. So price is creating lower lows and lower highs in a very, very ugly, complex structure. But price started to go down here. And then what happened? You got a break above these highs here, and then a correction back down. And I believe it was likely off of the 5-minute demand is where you got that flip. Yeah, so this is technically our resistance here at this OB down. So if you take a look there, then price started to get the flip. So was there a trade opportunity? Yes, but you would have to, and I wouldn't have anticipated price to push with so much volume. But how we normally do high volume is we'll hold, because, you know, my target was only at this level of resistance up here. So after hitting this level of resistance, anything after that is a bonus. And if you have a lot of volume, just like what I do with every other trade in a high volume time, we don't close those trades until the first bearish candle after the target is hit. So you can just let this run until you get your first bearish candle close, and price began to push up. Let's see how it closed. Still closes bullish. Still closes bullish. But it's getting a slow up here. All right, it closed bearish. Get out now. So what would the stop loss and the entry have been? Well, when price tapped into that 5-minute demand area, the first bullish candle was here. This was our first bullish candle. So that is going to be, that should have been the entry candle. And then set your stop loss below the low here for price to go back up to this target. And then when it blew through the target, you see on the 15-minute time frame, if you take a look here, that we just had so much volume. This 15-minute candle closed with so much volume, hold it into the first 1 minute bearish flip, you know, and then that gives us, you know, around a 1 to a 5 risk to reward there. But essentially, we weren't able to get this one, and it was simply because of this. If this liquidity grab doesn't happen here, To me, it doesn't make it a complex structure, but everything happens for a reason. Why did we see so much volume? We seen more volume in the Asian session yesterday than we had almost seen nearly the whole week. And why is that? Or not the whole week. Let's zoom out here. Yeah, because the week started, Sunday night was a good move to the downside, and then we've been relatively slow. But as far as in one 1 hour candle, we've seen more volume than we had seen in the entire week. So why did we get this immense amount of volume? It's because we were at that daily level of resistance here. And when you get to these strong areas of resistance on the daily time frame, even within here, when price reached this level, you start to see that correction form. And so we came to that key level on the daily time frame. And you got to understand where we're at on the daily time frame is in a corrective structure. Like, based on this daily time frame, like the current wave that we're in on the daily time frame is a corrective structure in terms of where price has been going and creating higher highs and higher lows. What we did was we retested a key level here, and now it's up to see how price reacts. Now, we don't trade the daily time frame because this is weeks. This is about 2 weeks of data right there. So we trade the smaller time frame, but just understanding where we were at on the daily time frame is why we ended up getting that type of spike in volume when we had no news, we had no data coming out or anything like that. But we've seen so much volume just simply because the structure, where we were at in the structure on the larger time frame. So that could have been the trade last night, and it would have been initially a corrective structure trade. So what are we seeing now? Let's go to what we're seeing now. Price is still creating higher highs and higher lows within this wave here on EUR/USD on the 30-minute time frame. Despite price starting to appear to slow up, it is still creating these higher highs and higher lows. So technically, if this low doesn't get broken at the start of 9 o'clock, that's where, let's say we're in our session time. Let's just say we're fast forward to 9 o'clock. The 4-hour candle, just previous 4-hour candle closed bullish. This would be an area of interest to take a potential continuation because price is creating higher highs and higher lows. Trade up to here, and this be the target. But since we have news, you got to wait for the news. And even the news, if this 15-minute candle, the current 15, because what is it? Yeah. If this current 15-minute candle closes bullish, we could see this news blow up through this high up here. It can also do a liquidity grab and then flip back down, which is why we have to wait for the spike of the news. We can't get in on, prior to the news. And I have some examples of trading NFP live. We traded NFP live last week, but I have more examples of live trading high volume news on my channel. And that's why, we do it this way. Essentially, it just protects you, especially when the spike of the news comes out. There's a lot of times that spreads tend to widen, people get slipped. Some people opt to try to do buy and sell stops, but you can have both of them be activated and wound up losing big. I've seen traders do that as well. So this seemed to be the best way of going about it, and all we use is our high volume scaling. So when we do have times of high volume. Oh, that was another thing about last night. There was no scaling. So when we get this high volume move right here, none of these candles formed any type of retest on a smaller time frame that we were able to scale into this trade. You can see on the 1 minute time frame here, none of these candles until that first bearish candle had closed well past our target level, had closed anywhere to give us our scaling position from the high volume. Generally, that's not the case with news, because you'll see a spike, and generally right after the spike, you'll see a corrective structure happen on a smaller time frame, and then a continuation. Just because structure is going to respect structure. So if this is like how you see, or we are in this bullish wave, we just came to that key level of demand here. Taking a buy at this area once this candle closed bullish would have been likely ideal, but I don't trade the spike of the news. But what I would do if we were in this position is before the news have stops move to break even, so that you don't take any risk as far as going forward on the spike of the news, and you can still lose some with moving stops to break even because price moves so fast that your broker might not be able to execute you right where your stop loss is at. It might slip a little bit lower. It's called slippage, and that's what happens when you have these high volume news events, which makes them a little risky to trade the spike. Me personally, I don't like to trade the spike. I have traded the spike before earlier on in my trading career, or my trading journey, I guess you could say. But it was less than ideal. So we got about another 20 or so minutes until, or not 20, excuse me, 9 minutes until the news is released. And then we'll see how price reacts. As of right now, the structure is bullish. Previous 4-hour candle was bullish. Previous 4-hour candle is bearish, excuse me. Oh, this will be interesting to see how this goes. And the good thing about this is, even if we don't trade the immediate volume following the spike of the news, like let's say on the 5-minute time frame, we can still capture an entry on the next 4-hour candle that's going to start at 9 o'clock. So whatever this gives us, because sometimes with news you can get a spike in one direction and then for the rest of the session it goes in the opposite direction. And if let's say we get a spike up but price still comes back down to close bearish, then sell moves to the downside, price could trickle down there. So it's just trading the volume after the news is just so much better than trading the spike of the news itself. Yes, you can win big, but you can lose big with the spike of the news. It's more of like a 50-50 case. We take the probability out of it when we wait for the news and the direction to release and then trade the volume following that. It's just a safer way to go about trading the news, in my personal opinion. So we'll wait here. This morning, so last night or yesterday, I told you guys that I had stayed up the night before super late trying to get an entry on a trade that I shouldn't have probably even taken. But yesterday at about 7 o'clock, I'm not gonna lie to you, I was out of it. So, or like 5 o'clock, really 5 o'clock, I was out of it. And then I fell asleep. And I was supposed to there were some things that I wanted to get done. When I fell asleep. I had a meeting with somebody earlier in the day that I had to go to. And then I came home. And then by the time I got home, I was low-key cooked. And I was like, all right, I'm going to just lay here for a second. I ain't going to go to sleep. I'm just lay here for a second. Next thing I know, it's 2 hours later, 7 o'clock. And then I'm trying to shake it loose, get ready for the session. And then I'm looking at the session. It's like, yeah, it was shady. But all that to say is, yeah, I'm not staying up past 10:30 lights out anymore. And then so last night I went to sleep 10:30 and then woke up this morning to go do leg day. And there was somebody who was outside. And mind you, I was going to the gym. It was like 5 o'clock in the morning. There's somebody outside who needed my help or to get his car, try to jump his car. He had rode his bike like 8 miles in the night before to fix the alternator in it. And then once he fixed the alternator, his battery was dead. So then and mind you, I'm seeing him at 4 a.m. He said, slept there in his car or whatever. And then his phone died. So he had to go in the building to get his phone charged or whatever. And he was just oiled up and everything. And I could tell it was going through. So we tried to get his car to jump for about 30 minutes or so. Then he couldn't get it jump. And he was like, he's just going to have to take his bike back to his house, which was a 20-minute drive. So it had to have been like an hour and some change bike ride. And I was like, nah, I'll give you a ride. So I wasn't able to do leg day. By the time it was all wrapped up, my workout time frame was done. So I haven't been to the gym yet or today to do legs. So that was my morning, but it was good to be able to help him out because it's cold outside, and to be able to have to ride your bike back 8 miles when he thought he was going to drive home, tragic. And everything is closed, so it's not like he could get his battery charged or anything like that. It would have been rough. What's good, KB? What's good? What's good? Hope you're doing good. I hope you are doing good. So just a little under 5 minutes here, and once we have this news release, then we can see what our direction is going to be. I want to see price go down. Let's look at the DXY. Let's take a look and see if we can't see what the DXY is doing. So the previous DXY candle closed bearish. I'm not gonna lie to you. This move to the downside looks like it could be something here. Now, what I will say though, there's something that is alarming, is that this gap hasn't quite gotten filled here. So generally we see gap fill plays where price will push up and fill the gap before, like, clearing the gap. So that's one thing that is likely to get filled. So even if we do get a push down, it'll be interesting to see if price is able to break through these lows on the larger time frame because we just have so much resistance appears at this level. Price came down 2 times, not once but twice, formed a change of character, came back down again, tried to retest it, and just didn't have enough volume to quite push through there. So this gap fill play could be something interesting here. Also noted, this 4-hour candle has no top wick. So different things that are generally likely to get filled there. So let's see what we got. 3 minutes here, and I'm gonna pull the news up on a different let me make sure I got all my trading platforms up. I gotta make sure that I am able to get the entry I want to get. EURUSD looks like it's selling off here. Hold on the 1 minute. We can start to see some of this volume. Previous 1 hour candle did close bearish. Strong rejection, grab liquidity above this high. Didn't have a top wick. So this is why price generally, I say when price doesn't have a top wick, you see that get corrected and filled. Let's see what she does, because she's moving down here pretty good on the 1 minute time frame. I can see on my other chart, getting quite the volume there. And you gotta admit, we gotta note that the previous 4-hour candle did close bearish. So if this current 4-hour candle closed bearish, even if we don't get the spike or release of the news or the volume following after, we can trade that next 4-hour candle, which will likely continue in the direction of whatever the 4-hour candle closes in the next 30 minutes. So 1 minute here. Let's see what we got. Let's go to, how do we want to watch this? On a 15-minute time frame? On a 15, let's see, maybe the 5 minute. Yeah, the 5 minute looks like it's nice. So let's full screen this here. Is it gonna let me full screen? There we go. All right, so let's watch that there and see how price reacts. Now, on the smaller time frame, price is at a key resistance level. So let's see, 2 minutes here. We got 2 minutes. So on the 1 minute time frame, you can see here, price is tapping into this demand zone. Oh, goodness gracious. Price is tapping into this demand zone and already showing a little sign of a rejection. Let's see if it dumps off though in the next. So this 1 minute candle is going to close bullish, which is generally a sign on a normal market structure of a correction. And then you see the next candle go. But after this candle closes, we're going to really see what price is talking about. I wonder if you could like open like a demo account on this TradingView. All right, so what do you guys think it's going to do? We got about a minute here, 26 seconds. Price is looking bearish. Are we going to see a big drop or a big push up? Previous 1 minute, the current 1 minute looks like it's going to close bullish. Oh, wait, it's fighting on this other chart here. It is bullish. It's going to 8 seconds left. Oh, nope, going. Oh, man, it's right on the cusp. Oh, it flipped bullish. It closed bullish. Let's see. And a huge spike to the downside. Previous 4-hour candle closed bearish, and we start to see a huge spike to the downside. All right. So now we're starting to get this volume. Let's see if we can get a corrective structure. So this is what I mean. Price generally pushes up, but I want to see an actual corrective structure happen on this 1 minute time frame. And this is just dropping off the face of the earth. Oh my goodness. Now, how could we have anticipated this? Well, the previous 4-hour candle did close bearish. And that's important to note. The previous 4-hour candle closed bearish, and this just dropped and took through this low. So what just happened based on the smaller time frame, or based on how we know structure? Price is creating higher highs and higher lows, then boom, goes back and breaks a key low, rejects off of that. We could see a correction and then a continuation to come back down and target this low here. So if I dial down to the 1 minute time frame, this 1 minute candle still hasn't closed, and I need to see a correction. So I don't want to get in just on, this move here. I want to see candles start to close bullish, and we actually get I'm not necessarily a full-on correction, but we start to see a correction to form. We're talking anywhere from about how many pips in a stop loss, depending. I would say about 10 pips is conservative. And it's just not too late for us. So like, even if we can't get the first immediate move, that next 4-hour candle at 9 o'clock, we should be able to scale in. So let me see, so I can know how much I'm going to risk. Let's go. Yeah, 20 lots. That's what I anticipated. Have that already up. So you can see we're starting to get that correction. An immense correction. And what we're going to start to see is, was this the true structure, or is this a liquidity grab? So with CPI, and generally I would say more so with CPI than NFP, sometimes with FOMC, but generally more so I've seen this with CPI, that the spike will go for a liquidity grab. I mean, we could start to see this continue to the downside, which is what we're going to be looking to trade. But it could do that liquidity grab and then make a move back to the upside there. So does this have a top wick? It does not. On this chart it does though, but on here it does not. So let's see, is this going to be the correction? I would really want to see, for me personally, this 1 minute candle flip back up to bullish, grab this top wick, make a little bit of a steeper move to the upside, and get a better, a more solid candle for a sell down. So let's see, we're going to go up. Is it going to go up and get that top wick now? On this other chart, it doesn't. It has a top wick, but it doesn't on trading view. So I'm interested in seeing. Oh, well. Yeah. So yeah, it's going up now. It would appears to get the top wick. 1 minute candle closed bearish. It's likely that this can just start selling now. I don't like how this doesn't have a top wick though. That I'm not a fan of. We got 45 seconds until the current 5 minute candle closes. So I think that's a better thing to wait for in terms of trading this high volume. Yep. That's what I'm going to do. Yeah, okay. See, this is what I want to see, is more of a correction to form. And then we get our solid sell candle to the downside and then make that move down there. But there's chances where price can start to look like a correction here when certain high volume news comes, and then for the rest of the session literally continue to push in the opposite direction of the spike. We've seen something similar that happened for NFP last week. So when we took the trade on NFP last week, price had closed. Oh yeah, that's a And I wish I could dial down to an even smaller time frame. Did this 5-minute candle close already? Oh, it did. Okay, let's see if this high gets broken or not on the 1 minute. I'm not in a trade yet. I'm just looking. I want to see if we can start to reject off of this area up here. If we reject off this area up here, we could see a flip down for a steeper move to the downside. But if it breaks through these highs, price is kind of in a complex structure. We don't have no bottom wick right here. And this is typical of some high volume news, but this 5-minute candle has no bottom wick. So it's likely that we see this 5-minute candle flip bearish to at least get that bottom wick at the very least. I just do not like the current structure. We got all these high volume candles with no top and bottom wicks that are likely to get filled. You can see that we got that bottom wick here for the 5-minute, that 5-minute flip. And if it continues to push down, then I'll just look for an additional scale in play going forward. Like I said, this isn't over yet because this current 4-hour candle hasn't closed. So what do we know about the next 4-hour candle? Well, hopefully what I would prefer to happen, and this would be like the dream setup, right? We get everything that goes perfect. The best setup for me is if this 4-hour candle closes bearish but doesn't close below this low here, the next 4-hour candle can give us a top wick, and then we can break through this current 4-hour candle low. And that'll be what I look to take. And then realistically, we have a candle here that doesn't have a bottom wick. So that can be where price looks to target ultimately, and then worst case scenario, you can see it's just going off of this level here, that 5-minute candle. After that previous 5-minute candle close, it just formed that top wick, and it's already filling that wick to the downside. So initially, it's just the structure. I do not like this structure normally, and I would take something like this, I would take this move trade, but the structure in terms of how these candles formed was just not pretty. It just was not pretty. But on the 5-minute time frame, we do see that price form that top wick, and then it's filling this to the downside here. So we just got that break of that low there. So price has now broken through this low. I think the next move is to now just wait for a corrective structure to form. So now what do we see happen? We had a low get formed, high volume, impulsive move to the downside. So we got our impulsive move. We got a slight corrective structure, and now a break for a new low. What does that mean? This becomes now our key high, and we would look for price to, and we got a high, bro, my mouse is tweaking. We got high volume, so price doesn't have to pull all the way back up to this area, but this would be my ideal area that I would look for price to go to get a retest potentially on that next 4-hour candle, depending on how price moves, in the next 20 or so minutes. And after some high volume news, 20 minutes is enough to shake up the structure a little bit from what we currently see now. But ideally, if these candles form normally, then we take this sell move at the beginning or at the start of that new candle, that new 5-minute candle, with a stops above the previous high within this area. So like, I think this was the start of our new 5-minute candle. Yeah, so as this is pushing up, a stops above there, and that move to the downside to break the low for that continuation play would have ideally been the trade, but it just didn't. It didn't have the top. It just didn't form how I wanted it to form to be able to scale in on the trade. But essentially, that is the scale in play. That is it there. So what we're going to do from going forward, we're just going to wait for the next 20 minutes, let this volume play out there, and however deep price goes, whatever, we will look to get a corrective structure on the start of the next 4-hour candle and to break whatever the previous or whatever this current 4-hour candle's low is going to be in the direction of the trend. So wasn't able to get the actual trade on following the spike of the volume, which is kind of a bummer, because we could be floating pretty decent. Well, we would have probably taken profit, especially after this 1 minute candle starts to form this bullishness. That shines that a change, or not a change of character, a corrective structure could be forming. So, but it would have been a really quick trade. But it's okay, because this happens over and over and over and over again. We did the same exact thing last Friday for NFP, where we actually did execute on the position for a price to hit the target. Price got near our target, and then for the rest of the session, we seen that it had reversed. When it got near our target, we went ahead and closed our profits, understanding that price could flip off of this level or push down. And we could see differently from here that price came to this level. It closed bearish. When price had came to this level for NFP last week, we got to this level and then price closed bullish. That next candle closed bullish. It didn't push down. So similar to how this, well, not similar to this candle in particular, but similar to how this candle can signal that price wants to now make a move to the upside potential. But we just have so much bearish volume. What was the actual numbers? Let's take a look and see what the actual numbers were that were released here. So we see the numbers release was, let's go, hold on. So I got to see which one of these. Previous consensus, actual. Okay, so this was the previous number. This is what they expected it to be. It came out better than expected, which is a bullish sign for the dollar. This is a good sign essentially for, well, a bullish sign for the dollar. So if we come over here to trading view here, we can see that the DXY is probably taken off. You can see there, taken off to the upside. Gold actually is seeing this spike to the downside. And what happened every single time gold came to this level? Gold has rejected off of this level every single time. And we were trading these bullish waves back in August. That's what we were trading. Then price began to range off here. And since we've started trading more so of EURUSD, because we've been more in a trending market. As for gold, it's been ranging. So it counts, in terms of structure, this is for EURUSD, it was just cleaner structure. I trade both of them for periods at a time for both of them. There'll be times where we'll be trading only gold for this whole wave up and don't even look at EURUSD. And then for the past 2 weeks, you can see that we've just been trading EURUSD and haven't really tapped into gold all too much, because it's just been in this is the highest level gold has ever been. And statistically through time, gold just continues to increase. This is why investors, the people with the real money, they invest their money and they hold their money in gold. So their money is not in the banks. They're in stocks. They're in real estate. And for a lot of people, it's in gold. So if you take the look at the history of gold, you can see just from the start, it has continued to just climb. And this is due to inflation and the price or inflation rates rising. But essentially, that's what we see happening there. So let's go back to EURUSD here, because the structure is looking pretty scalable. And I can't dial down to any smaller of a time frame. So this is just going to have to do. We can't really see the structure here, but what happens here is we got a low created. If we could dial down to the, let's say, 15 second, we had a 1 minute correction, push down, created a new low, corrected, retested the key high, didn't break that low, came back down, pushed back down, broke the low. And it's just basically forming lower lows and lower highs. You can't really see it here because it happens so fast on the smaller time frame that you can't see the structure. But based off the wicks, you can kind of start to read what had happened and what played out. And this is just because there's so much volume. So the times that we trade on the like 1 minute time frame and the generally on the 1 minute time frame, the times that we trade that is either in times of super high volume where you're not able to see the structure. There, back when I first started trading, I used to want to trade the continuation. And I would miss my entry trying to wait for like the 1 hour or the 4 hour candle to close. I would miss the initial entry that I want to get, which we seen today was here. I would miss this entry because I was waiting for the larger time frame, and you just can't see it. You got to dial down to the smaller time frame to see the structure develop and then trade in the direction of that volume. That would be how we execute that every single time. It's unfortunate that we couldn't get it today. I mean, we got it NFP, but for me, just leaving opportunities is something that we just gotta get through. You feel me? It's one of the parts of trading that can be kind of tough, but at the same time, we gotta think long term, where it's not about the individual trade that you take in the day. You know, it's not about that. It's about the long term, being able to consistently execute this for 3 or 4, 5, 10, 15, 20 years, and the compounding effect over that 20 years of learning and growing and constantly showing up. That's what it's about. So the individual day, the individual trade doesn't matter as much as, you know, working the system and, you know, coming on here and we talk about, you know, trade and how we trade the news, right? We talk about how we trade the news. We let the spike happen, and then we see the position that we could have executed on had, you know, the market structure been a little cleaner when we were in this area here. And I was, up until this candle closed bullish, as it was pushing bullish, I was ready to take my sell move for and set my stops up here. But it just looked, this candle, yeah, it just, I didn't like the fact that this candle didn't have this candle didn't have a bottom wick, or it does have a bottom wick, excuse me. But the opening candle didn't have a top wick, and price just looked as if we could see a correction back up. But that's not what happened. The 5 minute time frame formed a top wick and then continued, push right down through to the target. We can see the volume starting to slow up here a little bit. What is this level that we have marked out? Is this our previous? What is this? Oh, the level exactly. Look at that. It went right to that area where price hadn't formed that bottom wick, and then you start to see that types of rejection. So this is why I look to target these areas. This is why I don't feel the most comfortable taking a position where a candle doesn't have a top wick, you know, within this area, because these are areas that price likely targets if it does in fact reverse. So if price does come to this area here and we see it close bullish, then this can push up and create a steeper move to the upside. You can see the starting candle of this bullish wave does not have a top wick, but it's likely that following the news, the volume is just going to continue to push down. I'm not as much as worried about price going to push up way up here. It's likely that it won't have enough volume to do so. But when we start to get our corrector structure and to have a candle to close like this, to start like this and not flip back up, at least given the top wick, and then come back down, then I would have took my entry for sure. But for it to push down, and it just pushes down because it has so much volume. When price doesn't form top wicks or bottom wicks, it's because there was so much volume that it pushed down likely the entire time that it was open. It never once had enough energy, I guess you could say, to form that top wick. But you know, just like with anything else, it's a push-pull balance. So it didn't form it yet, but it will likely go back up to push up there eventually at some point. You know, I'm not saying today, I'm not saying tomorrow, but realistically, it'll likely work itself out. So what are we seeing happen here? What do we see happen for the previous 4 hour candle? Previous 4 hour candle closed bearish. We're in this bearish structure on the larger time frame. So this is not within this wave, just based on what we're looking at here on the larger time frame. You get a low created, a correction back up. Where does it retest? It retests your resistance on the larger time frame. You can see that this would have likely been our area that we would have had to target. Let's see if on the daily time frame it's a candle. Yeah, boom. Look at that right there at our resistance. It targets that, and then it comes back down, creates a new low, broke that low. So what are we in? We're in a bearish structure. Now, if you really look at it though, what structure are we in on this larger daily time frame? Well, we're in a corrective phase because it only took 1, 2, 3, 4, 5, 6 days to push up. It's taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. It's taken 2 weeks to correct the volume that happened in 6 days. And you can see prices creating higher highs and higher lows. So technically within the daily time frame, we are in a corrective structure phase. So where could price go? Where could we see price go at? And where could we see, you know, a strong level of potential resistance is at the starting push for that bullish move up there. So let's say price, this is the candle. This candle here, if price wants to flip and now become bullish, is where we could see price flip off of. So this could be our target for the next 4-hour candle, for price to push down, come, and it, since this is such a spicy level, this is a spicy level on the daily time frame. So since this is such a spicy level, price could get near it, but not necessarily tap into it. And a tap into it, especially if we get, let's say, price pushes down and we start to range for the rest of the day, but we are making, you know, lower lows and lower highs, and it comes down into this area, and then during the Asian session we have the 4-hour candle close bullish at this area. Oh yeah, there's no way we're not taking buys. No way, because this could be potentially, now it doesn't have to be, but this could potentially be this move to the upside to go back up and continue into the direction of the larger time frame trend. That could be the start. I'm not saying that it is, and we would have to see a lot of different structures get broken, a lot of strong areas to get broken. We would take the trade as a corrective structure trade and see if we can't get a steeper move to retest this area that started for this new push to the downside that broke this low there. So I know I'm saying a lot, but I hope that makes sense why we anticipate something like that to happen and how we look to go about it. So 7 minutes here, 7 minutes left here, but until this current 4-hour candle closes. You can see that this current 1-hour candle closed immensely bearish. That previous 30-minute candle gave it away though. This candle closing, oh no, wait, was it the 1 hour? Yeah, no, that previous 1-hour candle, excuse me, closing bearish really gave it away. You can see that these are generally our rejection types of candles. You got to see how it is. So when a candle grabs liquidity like this and then closes as a strong candle, and it's the first candle, and you can see some of these candles look to be in the same, but where I'm is at our session. So this one was at our session. All of these not in our session, right? So these don't matter, and this is why it's important to trade in the session. That's why it's the number 2 rule. The number 1 rule is first to look for if you got any news, because if you don't know that a spike like this is happening, then this could be potentially detrimental depending on how you, and it changes how you want to be able to manage your trade if you are in a position. Let's say we're holding these buys up here. You know, if you don't know you have news and you haven't moved stops to break even, which by this point you should have been well in the break even with our system. But let's just say somebody didn't have it and they was thinking price was going up. Then you come back and you have this huge loss because you didn't know news was happening. Yes, price reacts off of structure, so it was likely that it would have went down anyway, but it came down as fast as it is. You weren't able to manage and modify your positions and things like that. So rule number 1 is to, you know, already know what the news is, and rule number 2 is to trade in the session time, because the system works within the session time. Now it does work outside of session in different session times too, but its peak is in session time, you know, and the times that, and it can work for the London session. A lot of times we see a lot of volume for EURUSD during the London session. You can see we had on Sunday, that's where we had all of our volume on Sunday. We got the continuation at the New York session for that move to the downside to break this low, correct it up and push down. We got that trade, but you know, we didn't essentially get the high volume news and the high volume event. But we have more news this week. We have the ECB rate decision, or the ECB meeting. So we have more volume for this week. And that's also why I can anticipate that if price does close bullish here, that could be the start, you know, of a different larger time frame, you know, wave. So let's look at it on the 1 minute time frame. What are we looking here? What are we looking to see? It's looking like we're going to get ourselves some type of, resist or corrective structure. That's the word I'm looking for, for a potential move to the upside. Now, my premium zone is here. So the actual entry that we were supposed to, or that we wanted to take, or the entry area, shall I say, that we wanted to take our entry, is where we'll look for that correction to happen. And why I say this entry level, or this area, shall I say, is because price, same as it just has a lot of volume, but it created a low, then it corrected. And then it broke through that low, came down to here. This is the new low it made. And I want to see a correction back up. Price does not have to push all the way back up here. And realistically, it could flip off of a resistance here. We talked about when we have those high volume news. I think we talked about it more so last week. When we have those high volume news events, the two types of, or not just high volume news events, but just high volume anyway, the two types of entry models that we had. I think we talked about it on Monday. You have your full-on corrective structure retest, or your full-on corrective structure that'll go to your key supplier demand zone, and then you have your retest play. And your retest play happens when you have high volume impulsive moves to the downside, where price, you get this high volume news, price can't go all the way back up to here. That's why I said I wasn't worried for price to push back up here and to break these highs, because it's likely that price won't have enough volume or energy, as I like to think of it, to push back up there. How I see it is a mountain. You've been trying to go up the mountain, or how I see it is like, yeah, a mountain, I guess you could say. You're going up the mountain, price gets up there, pushes up, and then drops through. It tries to push up, but it just can't. It just was too much, and then it just drops back down. You roll the ball up the mountain, it comes back down. You try to roll it back up, it doesn't have enough volume to get there, and then push back down. I hope that kind of makes sense. Oh my goodness, I gotta start remembering to do that. That's on me. I gotta take it off of studio mode. That's the third time I did that. I'm gonna stop using studio mode so that you guys can just see it. Thank you for mentioning that, because I'm over here talking to you guys this whole time about this. So anyways, this is where I think price can push to. We got a higher high and higher low created. So price pushes down, creates a high, then breaks through this low here. So as it broke through this low, where I'm looking to retest is up here to my key demand zone, or supply zone, excuse me. So what I would be looking to take is a trade that's roughly about a 7 pip stop loss. So we're going to equate for 7 pips of a stop loss there, so that I already know what my lot size is, 28.5 lots. So that brings us up from 20 lots to 28.5, 28.5, and then it'll be a sell protection. I'm just setting it up. I'm not executing a position. I just want it to be set up so that when price, because we have so much volume, if I'm sitting here and I'm trying to set it up before price gets, or when price gets to that level, I'll be late, and then I won't get the desired entry I want. So 1.10327 or 1.10324. 1.10324. All right, cool. So I'm not gonna send the order. I want to see this corrective structure start. Is this 4-hour candle closed? The 4-hour candle hasn't closed yet. This is a great sign. This is a great sign. So check it. The 4-hour candle closed bear, or is going to close bearish, right? We're not going to get enough volume to flip this here. Now, what are we seeing happen on the smaller time frame? Price is forming a corrective structure. So what does that mean for the start of the candle? So this candle closes in 47 minutes, and I want to see a push back up to here. So what does that mean if we get a push back up to here? This will be the top wick for the start of the new 4-hour candle. We're looking and expecting it to flip off a resistance here, and price can looks like it's doing the retest play. It looks like we're not even going to get that, and we're going to get a retest play here and price to push down. This could happen. I want to wait for this 4-hour candle to close, though, before I look to take my entry, because this 4-hour candle is likely going to form some type of top wick, whether it just be this retest play or whatever. It'll form some type of top wick. This 5-minute candle is closing bullish too, so I want to see a steeper move to the upside If price pushes down from here, it just pushes down from here. And it was the retest play, the high volume retest play. But I want to see this move to this upside here. So let's see, 4-hour candle close. We're getting this move here. Let's see if we're going to go ahead and 4 pips. So 5 pips will go down to 5 pips. So I'm going to go ahead and take a sell from, let's see, from this area here. And then I'm going to change my stop loss so I'm in a sell position now. I'm going to modify my position. I got to change my stop loss though. 1.100222. 1.10222. 1.1. Oh man, I might just have to close my position manually, because if it takes me out, I'm gonna have to close manually. 1.10222. Modify. Okay, so let's see. And so this will be the first entry I take, and then the next entry, if this doesn't work out and we do see a retest play up here and price to push to that area and we get a rejection off of that area, I'll go ahead and then scale in for another potential position. So I only took a 0.5% on this trade here because it's such a high volume trade. And a kind of higher risk, which allows me to potentially take my other trade up here at another 0.5 for just a 1% risk on the day. That's what I'm looking for. So we shall see how she begins to run. And what my target is going to be is just a break below this low for the previous 4-hour candle to break that low there. And we want to see that move to the downside. So let me set my TP, modify one more time. 1.10034. So let's see if we get just that retest play. Is this going to be the retest play trade and we see the price continue to move to the downside? And while I'm willing to take this trade at a reduced risk, so I didn't get in at my point or my 1%, but I got in at a 0.5, is because price doesn't have to push back up to here since we do have so much volume. This could be the top of the current 4-hour candle. The 4-hour candle does in fact have a top wick, and it's just a slight retest of this resistance here. We have resistance here, and that's why I wanted to be aware that, you know, this could just be a retest play and price began to fill this move to the downside. So that's essentially what I wanted to see for this trade here. And when price comes into this level or we start to see some volume, we'll move stops to break even, make this a risk-free trade, and then just leave it from there to run. Leave it there to run. So I'm going to get some volume. Let's see if we can get a break below this low here. We get a break below this low, I will likely go move stops to break even. So I'm running up 0.5 risk to reward. I'm going to move my stops to break even, securing my risk on this trade. We're running about a 1-to-1 now. Where's my actual entry? 1.165, 1.165. All right, so now this is risk-free. So we're got this move to the downside, retest play, and now we just got to let it run to our full take profit. The other day, and if price tags us out at break-even, it tags us out at break-even. That's okay. That is okay. Taking me out at break-even, that's cool. It just took us out at break-even, and it's likely just going to, let's see how it reacts here. We were at about a 1-to-1 risk to reward. Price came back, took us out at break even. It still could just flip off of this area. That could have likely just been a retest, and price continues to push to the downside. Let's see what happens. Previous 4 or 5 minute close bullish. Previous 15 close bullish. Previous 30 still bearish. 1 hour bearish, 4 hour bearish. So we are starting to see a continued move to the upside, but look at where price is at currently. This becomes the key high. So as long as this area right here, price came and created a low, corrected, created this high, broke through that low. That's why I said I'm gonna go ahead and move my stops to break even if we break through this low, because essentially price shouldn't come back up if we have that volume and also not break this key high. So where price is at now, we could likely see that flip off of, because that's that key high that we're in on that structure. And we have no bottom wick. If this comes to fruition, let me see here. Hold on a second. Let me see something. My order history, because I definitely moved stops to break even. Order history, but was still executed with a 284L. And that's what happens when you got this high volume, man. Spreads began to widen a little bit, and I don't like moving stops to break even and then still losing. I talked about it yesterday, or not yesterday, I think Monday session, moving stops to break even a little bit slightly in profit to avoid that, but we just got so high of spreads that it just wasn't going. So our first trade entry, missed that for the move to the downside. Second trade entry, break even trade. Let us see. Let's see what happens here. Let's see what happens. The 15-minute close bearish or bullish, excuse me. And we still haven't tapped into that key zone. So, and realistically, if price does push up and break through this high to make that move to the key zone, what we did here, and just in general, not even just, even if it does push to the downside, that's just the risk that we take. But essentially, I guess moving stops above this high, which shouldn't get broken. But like I said, I don't like moving stops to break even and then being in slight drawdown. Price can react off of this level and push right to our target without breaking this high, because technically this is a lower low, a lower high, a lower low, a lower high we're anticipating, right? And then for a steeper move to the downside to go and fill that previous 4-hour candle wick, which we were talking about, which we mentioned on. So we were floating a little bit over a 1-to-1, ended up with a break even. That's okay though. That is okay. What is that? Oh, okay. Yeah, that's something different. So let's see. It looks like the DXY is starting to give a little bit of a corrective structure here on this 1 minute time frame. You can see price pushed up, is creating higher highs, higher lows, came down, created this low, broke that high, pushed through. This is our change of character here. Let's see if it pushes down, breaks through this low. If this continues to form in a corrective structure, EUR USD will continue to go up, as we're starting to see here. And so now we're looking at that trade, and it's like, okay, a break-even trade on a move that could have been an L is not a bad thing. And even realistically, and that's why let me slow down. That's why I moved stops to break even. We were running a 1-to-1 really quick, and then we broke through this low, moved stops to break even. If price would have closed bullish at this area here, I would have just manually closed it, because it's like, oh no, it's not breaking this low. It does want to push up. But in order for us to see a move to the downside, we had to, a continued move to the downside, we had to break through this low so that price could potentially form that retest play and push to the downside. And you can see prices just ripping to the upside. And in terms of what the volume looks, at the time we didn't really, I guess you could say, but at the time we were anticipating the volume to continue from the previous 4-hour candle. But what do we see happen? What is this? This is an impulsive move. This is now a corrective structure move, and we're talking in terms of volume. And then what do you see happen after that? Another impulsive move up. So where do we have some resistance? Resistance in this area, but we have an impulsive move, so price doesn't have to push all the way back to the resistance here or here, and then it continue pushing up. We wanted to see price push here. That's where I was initially going to say I was going to move my stops to break even, but identifying that price pushes through this low, breaks through this low, it shouldn't come back, and volume should continue pushing down, similar to what we see happened right here. Price pushes up and then it pushes down, continuing with this volume. That's what I wanted to see. This is really the entry that we were supposed to have. I wanted to get a continuation on the next 4 hour and was hoping that this was going to be the retest play that we were that we've caught before. I want to say last week. Which one of these trades was a retest? Oh no, Monday's trade was a retest play trade. So I couldn't even spot it to you on the 1 minute time frame from here. But Monday's trade was in fact a retest trade. Monday. Here, nope. Yeah, so okay, this was the resistance. This was our 4 hour candle close. So we're gonna do the bar by bar replay here. So the previous 4 hour had closed bearish. We were anticipating a steeper move to the down. Or wait, where am I at? Is this 9 o'clock? Yeah, okay. 9 o'clock happens, right? We get our change of character. We wanted to see because I took sales based on, I gotta look at the 15-minute time frame because that's the candle that I took my entry off of. Price pushed up. Okay, boom, here. So this is our retest play that we got on Monday, right? We wanted to see price come back up to this key demand zone or key supply zone, but we didn't see that. We had an impulsive move up, and this was obviously a corrective structure. And so we were anticipating, oh, you know what? This is going to be a retest play. How did I anticipate it? Well, because we missed a trade last Thursday that did the same exact thing. And so, and with the same exact way, candle closed, 15-minute candle closes bearish like this. So we went ahead and took our entries after this 15-minute candle close, understanding that price could go up there, make a steeper move to the upside. But what happened in that next 15-minute candle? We got that volume to the downside. And what did I do wrong is we went ahead when price started to reject off of this area, understanding that we still are creating higher highs and higher lows on this smaller time frame. You got to see this structure. We're creating higher highs and higher lows. So when price reacts off of this level here, I'm immediately thinking, okay, we're getting a bullish move. We could either see a corrective structure up. We could see some type of move to the upside, either to here or to break this high, and if it breaks this high, to go up here. So we went ahead and closed our profits. What do we know about this trade though that we were taking? It was a continuation trade of a already larger time frame down move. So my take profit, and mentioned on stream, take profit was down here, but what happened? Price retested back up. It did form that correction. If you take a look here on the 5 minute time frame, you can see that we did in fact form that correction and didn't quite get to my entry level, which was at 9.7. But it could have been very simply a break-even trade, and then price, you know, obviously went through and it hit our take profit. So, so similar to that trade is what we were anticipating to happen for today's trade, for a continued move to the downside. And what do we see happening? Well, price forming that corrective structure that we talked about yesterday. So this previous 15-minute candle closed bullish, and that was something that I should have noted, because I believe that that's the within this candle, as this candle closed bullish, is where we took our entry. So that's an additional sign that price could likely make a steeper move to the upside that I just didn't spot, that it had closed bullish like that, right? 8:45. Yeah, I'm looking at this for the anticipation of the I was looking at okay, so I went from the 4 hour to the 1 hour to the 30-minute to like the 5-minute, and just was looking for a correction. Didn't even peep that the 15-minute candle had closed bullish, because I talked to you guys yesterday that this is oftentimes a reversal. And this is what I wanted to see when I was telling you guys earlier in the session. If price can push back down to this area and we get a 4 hour candle to close bullish, similar to how we see the 15-minute candle close bullish like this is a sign that we can get a steeper corrective structure up. And I want to see that move on the 4 hour time frame from down there. So what do we have today? The first trade for our scale-in, high volume scale-in entry location would have hit take profit, but it didn't form the structure that we wanted to see. We ended up getting a structure that we wanted to see, and we wanted to see a continuation, and then, ended up with a break-even trade. It's not bad, price. We got in here, set our stops above this high, anticipating that steep move to the downside, similar to what we kind of saw happen right after the spike of the news. So not a bad trade, not a bad trading day, a break-even day. It is what it is. It's gonna be what it's gonna be, And we'll come back to the markets later for the New York or the Asian session, the Tokyo session. I gotta stop calling it the Asian session. It's the Tokyo session. Is a technical term. And so what are we starting to see now? Oftentimes, like I said, you get those high volume moves to the downside, smaller time frame correction for a continuation of the volume. And then for the rest of the session, price could push in the opposite direction. And it can go up, and this can look like a corrective structure now, but when price forms this type of structure on the 15-minute time frame, a lot of times price pushes all the way through and completely changes the direction of the trend. I want to see if we can find a spot where it was doing that, where it made a move like that, so I can give you an example. Okay, for instance, right here, this is the 4-hour time frame. Price pushed through, it grabbed liquidity below this low. This is at the start of the New York session too. What is price doing? It's looking like it's slow, but on the smaller time frame, it's creating higher highs and higher lows. And then what does it do? Because this was our previous key high that broke through the previous low of these highs, and then it boom pushed up. This happens a lot, just similar to right here. Price closes as that 4-hour candle. Next 4-hour candle closes bullish or bearish. But why did this candle close bearish? Because this was in the Sydney session time. It sucks. You know what I mean? But for that 4-hour candle that closed at the start of the session, it closed bullish. So what happens there is you start to see it be slow, and then boom, you get a pop. That's just how that structure is. I don't know what to call it. Like right here, you see the same kind of reversal candle. You get that. You get an impulse. It follows an impulsive move. So you get an impulsive move. You get a push up, another correction structure. You got to move to the upside. This time it formed a true corrective structure, but you can see it was 1, 2, 3, 4 4-hour candles that close in this structure, and you get those types of moves to the upside. At the very least, we would have wanted to see this 4-hour candle's wick get filled up because it pushed down, high volume, came down to a key level on the larger time frame, closed at this area, showing the signs that price could start the corrective structure, and then getting in on this candle here for stops below there or stops below there for that continued move up to at least fill this wick. We wouldn't have held this. We wouldn't have taken this trade because this is on the 4-hour time frame. But something like this happens, like we've seen on the 15-minute time frame or the 5-minute time frame, and that's a time where I would look to take a trade like that. So we oftentimes see that structure, and this could give us that full corrective structure. Or it can form like this and it do a correction and then continue down, kind of similar to what we've seen on for this one. It could do that corrective structure, and then you get another wave to the downside. With how much volume we have, that's what I would expect, especially since price formed that liquidity grabbing candle with the previous 1 hour. You see the previous 1 hour grabbing that liquidity above these highs here and then pushing down. I think that, a correction and a steeper move to the downside will be probable. In the 4-hour candle to close bearish. But if the 4-hour candle does close bullish, you can expect the next 4-hour candle to start forming a steeper move to the upside. And it's likely that we'll be looking for buys for our Asian session. Because, from now to our Asian session, there's only 2 4-hour candles that are going to close. So, no, is it 3? This 4-hour candle just opened. So 4-hour, that'll give us 8 hours. 8 hours from now, which is 9 o'clock, will put us at... Okay, so three 4-hour candles. So we'll likely see that third 4-hour candle close, and then we would look to get the volume following that. Let's see, what time is this? London session. Yeah. So in terms of trades, I think that is going to, let's see. Actually, let's see how this is looking on the 1 minute time frame. Because what do we see happening here on the 1 minute time frame? Well, price did in fact push back up to this level and is already showing some signs of rejecting this level. It hasn't formed a change of character. So within this wave, we are still considered bullish. And what do we know about that 15-minute time frame? Is this forming that steeper correction type structure that I was just breaking down to you all? But we have just tapped into this level. So this is an area if price does want to go down, and what would signify a price wanting to go down is a break below this low, a corrective structure, this high to not get broken. Then you can start to see that corrective move to the downside, or that continuation move to the downside, which we were initially trying to capitalize on. Yeah, and the previous 5 minute candle closed as a bearish candle there. That is a good rejection sign off of this level. And we might have just missed. I mean, this I just don't like this. I would be more inclined to taking a sell on this if this 15-minute candle closed bearish as like this. That would be a safer bet, because taking an entry before this closes, this can still, we have 8 minutes, so we're only halfway through. This can still flip, as we're seeing now, to be bullish, and the confirmation, and this would be just a slight corrective structure and a potential continuation. But a 15-minute candle closing bearish, this 15-minute candle closing bearish can give you a steeper move to the downside, whether it be within this demand zone for another push up, or to now start that continuation move to break the low. It's just a if-then thing. If price does this, then this. If price does this, then this. And it all comes down to being able to spot these things. And with repetition and experience can't be bought. You have to really spend time in the market to be able to identify. It's easier if somebody can tell you up front and you don't have to figure it out yourself. But even still, when somebody does tell you, you have to spend time on the charts to be able to identify it for yourself. Because the biggest thing with me when I started is I didn't trust anybody, right? So I need to test this out for myself to make sure that this is what it is, that it does work. And as you start to show up more and we start to do these more, you start to see it easier, It doesn't take much for me to come to a chart and identify what it is that I'm looking for. Like for this session in particular, what happened? Well, the previous 4-hour candle closed bearish. Off rip, I'm already thinking sells. My bias is to the downside. Whatever trade I look is going to be a sell trade, right? Where could we see a potential entry? Today was a different, so today doesn't really count because today was a stipulation. Today wasn't an average day in the markets. Today we had some high volume news, which changes things for us. But in an average day, the previous 4-hour candle closes bearish. I'm gonna go ahead and, you want to take your entry within here after that 4-hour candle closed bearish, and preferably within this bullish move from the new 4-hour candle, and you want to set your stops above the resistance. Well, where's the resistance this is our resistance here. So with somewhere within this move in the smaller time frame, we'll on the smaller time frame we dial down, we'll see our key zone that we want to see the retest from. But then something like that, for now, what are we looking for? A continuation move to the downside to break this low here. That's all it would be. On an average day, and you generally wouldn't see this liquidity grab on an average day. But on news day, this liquidity grab is consistent. Last week on Wednesday, we had high volume news event that took us out for a break even trade before price ended up pushing down to our target profit. And I didn't know that we had news that day. So that's why, it's in my rules to check for news, but I just was completely unaware that we had news that day, and we ended up getting taken out. So it was this trade here. Price had just created a new low. It pushed up, wanted to get in after price closed bearish within our key zone. We talked about how price, as long as it didn't break up here, price could still is still considered bearish, because on the 4-hour time frame we were seeing, and you can see it here, lower lows and lower highs that were forming. So this was the high that started the break for this low to the downside here, and we were looking to scale in on this continuation move as price reached demand here for a continued move to just break through this low. That was the target. So last Wednesday, this was the trade that we took on live. So when did I take my entry? Well, after this 30-minute candle had closed bearish, and I think it was not even the 30-minute candle. I think it was like the 5-minute candle, which was my actual entry candle. So let's see here. I can't tell where price is at. Where was my... Oh, okay, my trade was right here. Sorry. Yeah, so it was this 5-minute candle. So when price tapped up into this level, and I did it based off of the 15-minute level of demand. So we were looking at the 15-minute level of demand, which goes from here to here, right? I went ahead and took my entry off of the 5-minute candle that closed bearish right there and set my stops above this high as far as my resistance, right? We started to get some volume in our direction. We moved stops to break even. What happened? News released. Boom, liquidity grab liquidity, took us out at break even, so we didn't lose anything on this trade, but it grabbed liquidity above this high here and then closed bearish. And then what do we see happen after that? That move to the downside. So what was our trade supposed to be for that day is to wait for the news, similar to what we did today, and then trade the volume following the direction of the news. You can see price on the news, we get this spike up, a spike down, but it closes bearish at a key retest level, or within a key retest level. Liquidity grab doesn't matter. We set our stops above the liquidity, and you could really set your stops back above this area here, because price is not going to go back up to grab. It doesn't grab liquidity twice. If it was going to go back up, it's just going to flip. You know, it's just going to be bullish at that point. So realistically, still keeping that same stop loss, the liquidity grab is out of there, or even just setting your stops above the high. It doesn't make all that much of a difference. This is, I guess you could say, it's safer, quote unquote. And then that same target, and just waiting and being able to understand that we did have PMI news, and that price could, you know, we could see something like that happen. Similar to what we seen happen last night. We didn't have news, but we had a liquidity grab before the initial move, but it was that we were at a key level in the markets, and it hadn't broken the previous 4-hour low. At the time, price was very, very slow in volume, but it did come back down to this level here, form this bullish candle, though the bullish candle had no bottom wick. So I guess that's another reason why price likely came and grabbed the liquidity below these lows here. It had no bottom wick, because this would, on a normal structure, if this had a bottom wick, this would have been, this is our demand zone, right? So from this candle here to the bottom of this candle here, you take your buy within this area. Well, realistically, you take your buy off of this demand candle here with the stops below there when price forms bullish. And then you still don't get taken out. But in terms of, let's say price is creating higher highs and higher lows, and then it comes back down to this level, we want to get a continuation trade of the corrective move. This would be your targeted area. But this candle has no top and bottom wick, and generally if it did, price would come to this area here, reject off of that, and then you start to see your move to the upside. So you can see that price is in fact rejecting off of a slow and low volume rejection. So to me, this is still let's see, we break through this low here. Okay, so it did break the previous low. We came up, pushed up, created a new high, retested our area, rejected off of our area twice, and you start to get a sort of a move to the downside. Ideally, I would take a trade after this candle closes bearish and set a stops above this high, and then a target back down to my low. So this, ideally, it would be the trade. I don't really like the big stop loss in terms of this being a 1 to 1.7 risk to reward trade, and that we're talking at a full risk to reward potential, because price could flip off of this 1-to-1 zone here. Higher risk in terms, it's a higher risk trade in terms that the profit would be lower in comparison to what we risk. So like if this was, let's say, a 1-to, okay, this is how I can explain it. You're setting up your trade, right? we're looking for a continuation trade, and let's just say perfect market conditions. The trade is looking like it's supposed to be something of, a 1-2. It has a 1-5 potential. That's a better or a less risky trade, not in terms of the structure, but in terms of how much you can potentially gain on the trade. Versus, a 1-2. So I would be more inclined to take a trade that would give me a potential 1-5 risk to reward over a trade. And now I'm not saying that you squeeze your stop loss to try to accommodate for risk to reward, because our stop loss is set based on our key zone. But let's say at our key zone, our stop loss is, what it is, and it does that trade in itself, abided by the system, would give you a 1-4, 1-5, 1-6 risk to reward. Those are trades that I would look to take. And so it's likely, let's see, this 15-minute candle closed bearish, current 15. And it doesn't have a bottom wick. I just am not liking. Oh, okay, it does. Current 15 has no top wick though, so we could see probably a flip up and then a continuation potentially. Yeah, so why I say that to say is that in terms of missing out on this move here, I don't feel like I missed out on much from here to back down to this low or potentially to this resistance. Now, this trade here was the trade that I was looking for today, and we can see that executed beautifully. We get in within this top wick. We can't dial down to the smaller time frame to see how price reacts off of this level of supply and demand. But we know the previous 4-hour candle had already closed bearish, but we had a lot of volume and price could likely fill that wick following the news. This move happens almost every time you have news. Every single time you have news, and it's like FOMC, NFP, CPI. Anytime you get that super high volume move like that, we get these corrections in that continuation. That's why I developed the news trading. That's how the news trading system got developed, because I noticed on the smaller time frame that price began to do this, and and continue in that direction. It would spike on the news and then it would pull back. You can't see it though within, let's say, this 15-minute candle. You don't see that pullback right there. And that was the problem initially that I was having earlier in my trading journey, is like I would know that price would push down and then it would spike all the way back up and it would look like it's going to go down. And I would say to my brother, like, yeah, it's going to flip. I just never could understand where it was going to flip, how it was going to flip, and how I should take my entry based on that flip. But I knew the flip would come. And then I started dialing and started to understand how the smaller time frame works in correlation to the larger time frame, because that was at a time where I was only looking at the 4-hour and the 1-hour time frame. So if we was taking a trade, it was going to be based off of the 1-hour candle. The trades that I was taking then would average about a 1-to-1 risk to reward, but they would take about 4 hours. Maybe it would be like a day or two. Like sometimes we were holding trades for a much longer, and I wasn't able to capitalize on those news events because I'm not getting in before the news. That's just almost gambling. Even though the previous 4-hour candle closed bearish, there's a lot of times you get liquidity grabs with news, and you just don't want to be in on there. But after the news, the structure is the structure. You know what I'm saying? That's all the volume that you're going to get is the spike, and then you can see that continuation move following the spike. So it just took me being able to understand how the smaller time frame works in correlation with the larger time frame, and developing a plan on how to be able to scale into that move that's not only profitable or not only consistent, but is something that is easily executed. Something that we can repeat over and over again, and it consistently work. And that's just how the system had got developed. So last week for NFP, we literally did the same thing, and our trade ran to that resistance level, and then we got the larger time frame flip, but we got our profits at that resistance level, similar to how we would have managed the trade today. If price would have closed bullish at this area, this next candle closed bullish without breaking this low, then we would have closed our position there, and it probably would have, formed that steeper move to the upside. But what happened for today is we got that break below the low, closed bearish, First candle that closes bullish, we want to get out. Boom, there. That's our entry and that's our exit. And it's something of like a 1 to like maybe a 2 out of 1 to 2 risk to reward trade, depending on where price actually executes us within, because it's going to be within the top wick of this blue candle, because that was the start let me see, I think it was like the start of the 5 minute. Yeah, it was the start of the 5 minute candle there. So we knew that 5 minute candle would likely form a top wick and fill the wick of this. And this is what I would see. I would see something like this, and I would be like, man, price is going, as it's pushing up, be like, price is going to fill this wick to the downside. And that's what we wanted to essentially see today, is that just that wick get filled. That would have been the trade. It's, neither here nor there. We'll get the next one. I just did not like the structure of how we didn't have these top wicks. If these close as regular candles, then prices, we got a better chance of price going to the downside. Even though it's still pushed to the target, it would have been a better chance. So not bad. I mean, it's not a bad day. Break even trade, break even day. One scaling position. So what price is doing here, let's see, we retested off of our key level, and then we got a change of character form. So price went from now creating higher highs and higher lows within this structure here to now creating a new low, breaking through these two key lows and then forming a corrective structure. So as far as a scaling play, a scaling trade, and I may take this at a 0.5 if we do see something like this happen, because ultimately I want to see this 4-hour candle fill the wick of the previous 4-hour candle and break through that low to target that larger daily time frame level of demand that we've seen happen on, or that we see here on the 4-hour time frame. So that's where we wanted. That was the whole trade idea, the whole trade setup for today when we took our scale in position. So if price in fact does, and I just don't like this not having a top wick. I can't get down with it. I'm sorry. I cannot take a trade that doesn't have a top wick, because it just, price will push through this and it'll come to this level and then it'll break through this high. And it's just, they just oftentimes get filled. Let's take a look at the DXY. What happened with the DXY? I told you guys before the session, oftentimes these gaps, they get filled. It happens. It's almost like an easy money grab. Like when you see these gaps, we need to be looking on how we can capitalize on when price fills the gap, where price is going to flip at, and our target is just literally for the gap fill. The gap fills happen. I'm telling you, they happen. So let's see if we can find another gap. So price had a gap here. What happened? After the correction, now even on the smaller time frame, when price came to here, it pushed up and it semi filled it, but we didn't have a candle that closed at this area. And it's likely that you could see this volume for the DXY continue to push up. I mean, we're at resistance, but it just, these fill plays happen often, man. So many times that you get a move where you close with a gap, price will do what it's got to do, and you start to fill those with candles closing. I'm trying to see if we can find some more. You get your gap there, price pushes down to the demand zone, it fills the gap, it breaks the high. Let's see if we can see some more. And generally you get your gaps at the start. So how gaps even form in the market is when price closes with so much volume, especially generally over the weekend. So we'll see it a lot of times. The gaps will happen. You'll open the week with a gap. And what that is so when price close, or when the markets close on Friday at 5:30 p.m. Eastern Standard Time, if it closes and it has so much volume, as is closed, and as the market is closed over Saturday and Sunday, it can continue to go up, or in our case, for where we are at in structure now. Where are we? Okay, so for this case, and you can see, let's see, now this was a Tuesday, so it wasn't a weekend gap, but it was a gap that formed following the start of the new daily candle, is where you got the gap there. But essentially, it's when price is closed and it continues to move down with volume, and because a lot of times over the weekend, price will just stay where it's at because nobody can trade. But if it has a lot of, well, retail traders can't trade, the banks can. So we can't enter positions, but I believe the banks can enter positions. But essentially, you see that volume continue, and then when you open the next week, it'll be up here and floating in no man's land. And that'll just because it pushed up and just continue to push up. And it would have been, if you could see the data, it would likely have been, you know, a corrective structure and a continued move up. And then you get that open, something like that. So, but when they happen, they get filled almost 100% of the time. Like that's how, like, I take trades specifically. I've taken a lot of trades specifically on, you know, a gap fill play. And we would execute not on the DXY, but in the opposite, which would the inverse, which is EURUSD, which is basically almost an inverted structure of the DXY. You can see for the DXY, the previous 4-hour candle closed bearish, but it closed as a weak bearish candle. So, and this just comes down to the DXY closing at a different time. You see this 4-hour candle closes in 1 hour and 19 minutes. It closed at a different time than this one, which is 3 hours and 19 minutes. So those are things that you got to look out for. Generally, I don't even know if I can do a different DXY that has the same close. Let's see, DXY. Let's see, maybe this one. This one looks even worse. This one closes in 2 hours. Let's see if we can get one that closes at the same time as EURUSD. Oh, I keep deleting it. Like that's going to change. This one closed out 1 hour. So it all depends on what broker you're looking at, because you can see how, based on the different DXY charts that we click on, how it changes. Switch to, what is this? Daily, weekly, monthly intervals are supported for that one. Oh, wow. Well, that's not going to help nobody. Let me see. For the 4-hour time frame. No, this one closed bearish too. So that's just something to look out for, to be aware of. These gap fill plays. So what did we learn today? We learned gap fill plays. We got some more reps, though it was mental reps on our high volume strategy. We were able to cover that. So gaps get filled. That's what we learned. Gaps get filled. We learned how to execute. Well, not how to execute, how we should execute on high volume news. What else is it that we talked about? Yeah, we're gonna leave it at that. So that was it for today. I likely that this is gonna, end my trading session for this week, or not for this week, but for right now. There's some things that I gotta get done. We're gonna get to. We're not gonna sit here all day. If I do look to trade a move within this session, I'll send it out to the Telegram. The VI for members in the VIP. This doesn't have a bottom wick, so we can see this continue flip down from from here. Price pushed down, didn't quite come to that retest zone that we wanted to see hit, but it did form a retest play, and if it breaks through this low, this now becomes the key high, and so on and so forth. And price could likely come back down to push to this target, being that if this current 15-minute candle, see, I don't like that. If this current 15-minute candle could close bearish, and this still could push down as long as this high isn't broken. And why is this my key high? Because on the 1 minute time frame, this was the high that started the change of character. So if we're getting now our continuation play, price is creating higher highs and higher lows. Created this high that was higher than this previous high right there. It broke through. That's our change of character. As long as it doesn't break that high right there, price could flip off of this area and push down to make a steeper move to the downside, even with this current 15-minute candle closing like this. But it's likely that the next 15-minute candle forms a steeper move to the upside, breaking whatever this candle high is with, and then it could go to the downside. So that's likely how it would play out. If price were, in fact, this is our true change of character, price is going to the downside to continue in the direction of the trend. And we know that this 4-hour candle is likely still to close as a bearish 4-hour candle, and still can, in fact, flip and push below, both below its low here and then to hit this level there. So let's see how it does. Oh, it does have a bottom wick, so that was inaccurate. This candle does, in fact, have a bottom wick. Sometimes you just got to really zoom in there. This candle didn't have a top wick. And let's see. This candle definitely didn't have a top wick. Yeah, these two candles, no top wicks, which is why I didn't take this play here. And I'm going to have to test this here to see what the success rate is of price hitting the actual take profit versus, you know, getting corrected and price make a steeper move to the upside. Because maybe this would be worth it to take with the, even with it not having a top wick, for price to just go at least to demand or that key level of the low that we're going to break, and then just look to take a quick profits. Either way, it would be a quick profit trade. But now differentiating whether it's worth it or not to take this trade, being that it doesn't have a top wick, and then, you know, quickly take our profits because price could come back up and fill that area there. This 1 minute candle, yeah, closing is, yeah, structure is relatively weak right now. Relatively weak. And this 30-minute candle can still flip. So, like, if this 30-minute candle closes bullish, now you're talking, you're going to have to wait, you know. It's just is what it is. But if this candle... excuse me. If this candle flips bearish, now that's, you know, helps the thesis that price is, in fact, moving down from this area here. And you're going to see this move to the downside. And we did what we said, had the change of character here. You get a volume move. It was a retest play. It wasn't the demand play. It was the retest play. You get a move to the downside, not breaking this low yet, but this doesn't become our key high. So since it didn't break this low, this is not our key high, and price can still push back up into this level and still be considered bearish. But if this move to the downside does break this low here, this does now become the key high because this is the start of the move that broke this low there. So let's see. I am freezing. How are you guys doing though? I haven't even asked you guys about anything. Let me know how you guys are doing today on this fine Wednesday after, I guess you could say morning. Well, it's morning where I'm at. Yeah, look at her go. She's going to go ahead and make that move to the downside. There. And so what happened? Price hit that retest zone that we were looking at, and the trade for this one would have likely been off of the entry, shall I say, would have had to been off of this one, because, you know, you come up there, price forms our little retest, boom, that's the entry. But the trade overall was only going to be like a 1 to 1.7 risk reward, because you got to set your stops above this high. And then you set your take profit to, you know, the low, of course. So we would be running at about probably like a 1 to 1 maybe, you know, currently. But that's what we're seeing. So with this 30-minute candle, this is exactly what I was talking about, that this 30-minute candle could flip because the previous one closed bearish and potentially break this low here. So it's doing that, you know, as we speak. It just broke the low. So since it just broke this low, now, like we just said, this becomes the key high for this continuation of this bearish structure to the downside. I love the markets, man. I absolutely love the markets. I love sitting here and not necessarily watching. I would much rather be in and active on a trade in this area for price to continue down to our larger time frame target. But it's just one of those days where things just don't quite go as planned, and that's okay. That's okay. What is important to note, though, that the system works. Wasn't able to execute off the system, but our high volume trade, boom, take profit. Our re-entry scalable, our retest play, because that's the trade we actually took. Our retest play looked good. We started to get some volume, move stops to break even, ended up being break even. Price was in a corrective structure. Where did it go? It went right back to that area where we were initially looking for price to go to, and then it started its move to the downside. You get your change of character and your continuation down. So and realistically, the only scaling move would have been on that move that we had just seen here. When this candle closes bearish, you can set your stops above this high, a riskier trade. It's kind of like that continuation of the retest trade, but you already know that we have resistance at this level, and price has rejected off of this level once, and you get this candle close, it doesn't break this high. We could say something like that could be our trade. Still targeting, well, we would target the previous 4-hour low would be our first target. So 90% secured already. And then, leave that 10% to potentially run to our larger time frame final target. That's it. That's pretty much it. There's nothing more that we can really do. Well, there's always something we could do. Let's see what's the next move. We just broke through that low. If price doesn't in fact push all the way to our area, where could it go? It could come back up to here, because we just formed this area, because this is our area of resistance. It can come up to here and then see that continue move to the downside, or you can see your retest play and then it continue move to the downside. We're coming to that larger time frame resistance. The 4-hour candle is flipping bearish, is filling that wick to the downside. This is all things that we wanted to see and we're anticipating. It just didn't quite happen how I wanted it to happen, or how I would have preferred it to go down, but it is exactly what we were expecting. In terms of the overall direction, the overall move we were looking for, it just didn't quite form the way we were able, in a way to which we would be able to, safely capitalize on it. We tried to get our retest entry and we couldn't, or we tried to get that retest play, got a little volume, was running about a 1-to-1 risk to reward, and it ended up being a break-even trade. And then price retests into the band, and then you get that move to the downside. So not a bad session. Another day with relatively no, yesterday we didn't take a trade. What happened yesterday? I think we were waiting for price to retest our area, and then it didn't quite retest the area and push down. Or we were looking for our demand retest. Let me see. Oh yeah. So you can see here, you can see it better on a 5-minute, I'm sure. Well, let me mark out the 15-minute candle that I was looking for. So this was my 15-minute candle that I was looking for price to retest into. Price had came down, created a low, lower high, higher high. This becomes the key low, pushes through that key low, broke the key low, formed a corrective structure. I wanted to see, and price at the time of our session was like right here. So we wanted to see this move to the upside for price to tap back into here. You can see we started to get that corrective structure that I had mentioned today, that type of corrective structure, but it didn't quite go to that retest level, and instead it came to within this demand zone. And I believe if we look at a smaller time frame, so it pushed up, pushed down, broke through this low. This does in fact become the key high. So that's why it's looking like we missed yesterday's trade. But in terms of the structure, still not the prettiest structure at all. By any means, not the prettiest structure. But our overall target and where we wanted price to go, for it to fill that move to back to the downside, did end up getting hit. And then price did hit that larger daily target that we were looking for it to go to retest. Goodness gracious. Where was that? Was this yesterday? Yeah, this yesterday. To retest this level here, which we said was the next immediate level where we had some type of resistance. And let's refine it so that I'm in at the top of the wick here. And that's also why we're seeing price having trouble, pushing down at this area. This is such a strong level that it pushed down, rejected off of it, started to push down again, and is rejecting off of, and you can see that it did push to that final target. So first target where we wanted to close 90% there, and then final target back at that low. So all good moves, we just gotta get it. We gotta string it together to where we can execute on it. And so the high volume move today wasn't able to execute on, or could have executed on. Didn't want to get in because of the way the candles formed, but essentially that was the entry, for the type of move that I was looking for. It was the entry location. Just because it didn't form with the candle that I specifically wanted doesn't mean that that's not it. But it also is important to note that it's likely that it's going to get filled. So that 1 minute time frame, you can see how we're reacting off of this area here. If price does push up, this area will get broken, which is why I anticipated that to happen, but it just did not close in a way that was inducive to me wanting to take this position and set stops above there. So 2 trades, 2 opportunities. But we learned a lot, and like I said, it's not about the one individual day. It's not about the one individual trade. We had potentially 3 plausible opportunities. This one, that was opportunity 1. This one, opportunity 2. This one, opportunity 3 at that retest there. And potentially an opportunity 4 if we look to scale in on this move for the continued move to the downside. By this time, it's, by that time, it's just not it. Same thing happened, price, because I would have wanted to see price go back up to here, form that retest. It had pushed up, came down. This is where I wanted to see that retest for that steeper move up. Price came to here and pushed down. So this would have been missed regardless. But 3 entries. 1, 2, 3. For one move, this move would have actually hit take profit. And if we would have took this trade and price hit take profit, I'm not looking to scale in for another trade. We already won on the day. We got this. The session would have likely been over. We'd have just chopped it up for a little bit after that and then went on. But since we didn't get this move, we wanted to find that scale in continuation play. Thought we had ourselves a nice retest play. Got in on our entry. Price pushed down. We ran to about a 1-to-1. It was looking like it was going to be promising. And then, we moved stops to break even, got taken out at break even. Price would have stopped us out and then actually pushed to that key level there and then started to form the change of character. And this moved to the downside. So, yeah, that would have been a 1-to-1 trade because it's not like I wouldn't have taken my entry here. As soon as this candle would have closed, I'm looking to get my entries. Actually, as soon as this candle was looking like it was about to close bearish, I'd have took my entry for a price to be up there. And it would just be at a 1-to-1. So nothing crazy in terms of what we missed as far as potential. There would have been the best trade to be able to get in on a short position, and I was seconds away from clicking an entry on this. But when price was looking like it was going to close bullish, I'm like, okay, maybe we can get a steeper move up and then we get our entry. And that just wasn't the case. Price rejected off of that level. That was as steep as that 5-minute candle wanted to go, and then it immediately filled the previous 5-minute candle, which was the overall take profit. So we would have been looking to take this trade at a 1%. I was going to take that at a 1%. So you figure, conservatively, let's say we got about a 1 to 2 risk to reward on that trade. And then, this opportunity, had gone to take profit, that would have been about a 1 to what was we looking at? And this is what I mean by profit potential. What was the profit potential? I was looking at about a 1 to 3, but we had strong resistance right here, so we would likely, definitely took some profits at that area. And hindsight is 2020. You could say what you want to say, but realistically, I know how I capitalize on this, and knowing that we have resistance there, the 5-minute or 1-minute candle start to close bullish. It wouldn't have been a high volume candle, but it would have been more like a candle that's similar to something like this. If I would have seen a candle close bullish like that after tapping in or getting close to this level, then definitely looking to close my profits, or at least majority of the profits, and then wait for price to continue to run. So we can see that our final and last potential scaling opportunity is in fact looking like it's going to go ahead and hit that take profit. So another 1 to 2. And it's not like we don't identify these areas and we're not seeing the entry and the exit points. It's just that we got to be able to capitalize. Got to capitalize on these moves. So of the 3 entries, took the 1 entry. That ended up being the only one that ran to break even. Of the 3 entries, all the other ones were looking like they're going to take profit. So this one, the first one, take profit. The second one, take profit. And what we'll do and what we'll scale and grow to is to be able to execute on both positions. Essentially, this one would have already been closed. So, and likely I would have stopped trading after this here. But let's say we do miss this one. We take this one. I told you guys that I was willing to take this one at a 0.5 and put my other 0.5 on this one. So the only thing that I would say is to take this trade here once price does in fact get up there at that 0.5 and look to get a 1 to 1.7 risk to reward. And you see we're coming into these resistance levels. Price is struggling off of there, and most likely would have been only at like a 1 to 1 risk to reward that we would have caught on that trade. So nothing crazy lost there. It's not like this was a 1 to 15 trade that we were looking at. It was about a 1 to 1.7 at max, which is, it's okay. So I hope you guys got some type of value out of this. At the very least, you get to understand how to capitalize on a high volume news event day. Like, that is this strategy. That's works. We did it last week for NFP. We were able. NFP came out up here. Let's see. Let's go to 5-minute first. So we were on session. We were able to get that move. So you can take a look here. This is where I was. Let's go ahead and I can do the bar replay. And this is beautiful. I don't know when TradingView added the ability to create to take buys and sells, but this is a great feature. Because it used to be able, you do the bar replay, you could go through, but you couldn't take an actual entry on the trade. So this is where we took a buy, and we set our stop loss below that low, and our take profit was set to be at the high, and then I don't know what the heck that is. So essentially this was the trade there, right? And then you see price started to push up in our direction. And I think I had like a 3 pip stop loss. So I had a set amount of stop loss. It pushed up into here. And now we're looking at it. We're already stops to break even on the trade. And then what happened? We got a rejection off of this area. So when price rejected and was showing signs of rejection within here, I went ahead and closed my position. I wanted to see a continuation for the break of the high, but I wanted to, since price was already pushing to the downside or began to show signs of rejection at this area, it was likely that we could see a steeper move to the downside because we hadn't reached any major structure to retest, right? Price was just basically in no man's land where we took the entry, but we weren't looking for a retest play. We were looking for a continuation and wick fill of the previous candle following the news. And when price began to reject off of there, oh no, a steeper move to the downside could happen. And that's exactly what happened. We started to see for the rest of that session that price was creating lower lows and lower highs, and that was okay. So even same with today, if we would have took our entry and price would have did that same move today, we would have executed on the same exact way, move stops to break even and then take our profits. It just so happens that with today, when price came to this level, that candle did in fact break through the low instead of closing now bullish for price to go make a steeper move to the upside. So the same exact is the system. You feel me? You just execute the system and, we just show up. The best thing about today is that we showed up. We got a little bit better. We were able to identify good moves, being able to spot good moves, being able to execute on good moves is even better. But, this is not a waste. This is not a waste of a day. A waste of a day would be not being on the charts for the session to even, identify this move, try to get in and make some shake. We had a break even. We did take a trade today, so we did have a break even day. But it could have been better than a break even day. We could have had, at least one winner, whether it be this one and that would have been the end of the day, or to scale in onto this move, which would be running as a winner now too. So, not bad. Not bad. We're identifying the charts. We're getting a little bit better. And it's 10 o'clock now, so I'm gonna go ahead. Do you guys have any questions? If you have any questions, definitely drop it in the chat. I'm open to answer some questions, and I'll give you like a second or two. But if no questions, or what, or is there anything that within your trading journey that you need help with, that you feel like that I'm just not quite understanding this, or I'm not understanding maybe structure or something like that, definitely you could drop it in the chat, or you can send me a private message, and we could work through it. There was a person that we talked about it on Monday who messaged me that he was having problems. He was break even. He's stuck at break even. He couldn't figure out why he was stuck at break even. And being stuck at break even is a good place to be, because that means you're right on the edge of profitability. Now, and generally with break even trades, it's either two things. When you're a break even trader, it's two things. Either one, you need to hold your system. Does your system allow you to get more than a 1-to-1 risk to reward trade? More than 1-to-1 risk to reward on the trade. If that's the case, then your average risk to reward on your trade is like a 1-to-3, and you're still at a break even. That means you're likely closing profits too early. Another thing is that can keep you at break even is not abiding by your system. So taking losses that you necessarily probably shouldn't have taken, or taking trades that you probably shouldn't have taken. Those are the two major things that can keep a trader at that break even stage, not quite profitable, because you can have a winning system, but if you don't abide by that system and you take L's, then those L's start to add up for the system. Or if you don't have if your trades give you an average of a 1-to-1 over a 1-to-1 risk to reward, so let's say a 1-to-3 average, which is generally where our trades is at, about a 1-to-3, 1-to-2.5 is what I'm seeing more recently with the current volume. Then if you're stuck at break even there, it's likely because maybe, and it could be a combination of both, but maybe it's just you're not holding your trades to your full take profit, and that can keep you at that break even stage either. I never let my winners go to full TP, always close too early. Yeah, and see that, and you and me, like me both. I'm not saying that I'm on the other end of the mountain. I'm definitely working towards holding take profits to longer, because you can see even with on Monday, and it was just me not. Well, why I took my profits on Monday makes sense. We hadn't quite got to that retest area, and I was faulting myself for that trade, but even thinking back on it like that, even in today, I would do that same thing over again, but it did hit the full take profit on Monday. I gotta go to the 15-minute time frame to see where my entry was at. So Monday here. Okay, so yeah. So price, even though it was creating higher highs and higher lows, it hadn't hit my retest level. I would still, take my profits there. But last week I executed those trades and took them profits at the right area too. So I was faulting myself, early about that. But you just got to understand what is the trade that you're taking, a corrective structure trade or a continuation trade. And then once you have that area, to just let it go, close your eyes, delete the app, and just let it go to those areas. But for me personally, that's one thing that was, even coming into this year, was one thing that, if you go to the podcast interview that I had made with a friend of mine who became funded, if you go back to it, that was one thing that I asked him. I was like, going into this year, what's one thing that you want to really work on? And he was like, trusting myself and just, holding trades to that full take profit area. We was making good bread, closing early, but we knew that wasn't the ceiling potential, that there's times where we close trades early, and it comes with the discipline. You have to, at first it's going to take discipline. And then it just becomes a habit. Once you have enough discipline, you get enough confidence, because essentially why we close our trades early is out of fear. And so, your fear of loss, we got this profit, I don't want to lose this profit, let's get out on the trade. But especially if the structure is not showing signs of being, of changing the direction. If there was no signs on Monday that price could push to the upside and make a steeper move to the upside, for the move that I took, let me see. Goodness gracious, where's my... Okay, up here. So yeah, so if there was no signs that price could in fact go up, or flip at this zone, then I wouldn't have taken my profit and just let price go to the downside. And realistically, depending on how spreads would have worked, if I would have just left that one at break even and price to continue to go down, even though it hit my take profit target, which, I keep losing the day. I think it's right here. Yeah, right here. So even though it would have hit my take profit target, and it wouldn't have taken me out on the chart at break even, it might have taken me out at break even because of spreads, and that would have been a break even trade, but price still pushed to my target profit, because we did in fact get a correction. So for me, taking my profits at this level here, why did I take my profits? Well, if you take a look back, let's just bar by bar replay it. Previous 15-minute candle closed bearish, I took a sell, right? I set my stop loss above this high, and then I set my take profit for back at this low. So what happened? Price pushed down with this candle move there. I'm like, okay, good. This is a great sign. We were running about a 1-to-1.5 risk to reward. I was like, all right, let's go ahead and move stops to break even. So we moved our stops to break even, right? And then what happened after that? We came to a key level, and we got to understand what was going on based on that larger time frame. Price hadn't quite yet reached my key supply zone that I was looking for a retest off of. This was going to be a retest play, which is generally riskier. And not riskier in terms of it's not a safe trade to take. I mean riskier as in these are trades that you might have to take your profits earlier, because you can see that steeper move to the upside. Similar to what we seen with NFP last week, and how we executed on that. But what happened? Price then closed as a bullish candle at this level here. So it showed the signs that, okay, you know what? We could start to see a correction back up. And maybe that'll go up and push up here. I don't want to lose my profits on there. So I went ahead and closed 90% of my position. I just took the stop loss off. I closed 90% of my position right there and left the runner to run. And then I think I ended up closing the runner early too. So that is the only thing that I would have say was the difference that I could have done better on Monday as far as this trade. Not that I closed 90% right here, but then I closed my runner, which wouldn't have taken me out and would have given me an additional $750. And because I only remember because I remember saying it, that at where I was running at, I was roughly up like 300 at like a 1-to-1 or 1 to something like that, and it was gonna give me about another additional $750. So closing that runner. But if there's no signs that price it can flip, or your trade, if there's no signs that your trade is invalid, there's no reason that we should close, because at this point it becomes internal. It's something internal going in us. Oh, I want to close this because of X, Y, and Z. And where we want to shift to and to be able to execute on is completely structural based. We don't have any emotional attachment to the entry, to the exit. It's simply based off of the structure. What is the structure showing us? The structure showed us that this was the entry and it was a continuation trade, so that means this is the larger time frame take profit. But what happened with the trade? Well, price didn't come back to our key level here, and it rejected off of this previous lower high, or higher low, excuse me, because price created a high, broke through this high, and if it doesn't break this low and you get some bullish change of character or a bullish reaction there, it can continue pushing up to this area here, because the structure could still be bearish. It could push up and then come back down to there, and it would still be considered bearish on the larger time frame, because this was our larger time frame key high. But we didn't want to wait for that because we could miss the trade. Last week Wednesday we missed the trade. That's why I also took the retest play today, because we didn't want to miss that potential move if that's where price was reacting off of. And we were able to move stops to break even, and similar to how we executed on that trade, we moved stops to break even. Just because of where I got my entry at is why stops wouldn't have taken me out at break even, because my entry was here. But that could have simply easily been an entry right here or entry right here, where you do get taken out at break even and then price moves to the downside. And price did in fact form that corrective structure following, and it could have just as easily continued to push up. So that's why I took my profit. Where I went wrong was closing my my runner, with an additional $200 profit, which was like right in this area. I should have left it and got the full 700, and that would have helped on the trade that we weren't supposed to take that night on the Asian session, where I missed my sleep and was in on the wrong direction trade. That helps for that, to take some of the weight off of that trade there. So, going forward, these are just little improvements that can help us on the larger, the grand scheme of this trading journey that we're on. Today is just one day in not a million, but of thousands of days, of thousands of trades, that we're going to take in this long journey. But what we were able to get some victories today were, the system being able to identify this whole with this everything played out to how we thought it was going to play out. The only thing that didn't happen is it didn't quite form the way we needed it to form to execute. But in terms of a regular structure, lower low, price created up, high volume entry, first bearish candle, just like with NFP, we're getting in, set the stops above the high there. That continuation to break through the low for it. That is good. This is good. We get that retest play, attempted that, was able to move stops to break even. Price rejected off of this area of resistance where we had, and then it took us out at break even, that's good. That trade, it was just going to be a break even trade. It was either going to be break even or it wasn't going to be a break even. But it was a break even trade. And then you get that steeper move to the upside. And this is what I could have seen last week. And this is why I took my profits not last week, on Monday, because we could have seen something similar to this happen, how price moves down into our profits, and then you get that rejection and that steeper move up to actually retest the initial level that we were anticipating price to flip off of, and then you get that steeper move to the downside. Came into this level of supply, price is struggling to break through these lows. You go ahead and take your profits because you got you a good one to whatever on this move to the downside, and call it a day. Call it a day, get a quick profit and call it a day. So I hope you guys were able to get some value out of it, and as we continue to show up for these sessions, we'll get better. We're getting better. We're just getting more and more seasoned. We're getting it's like a diamond. Well, not a diamond. because that's pressure. That's more of a pressure analogy. But we're more so like a nice brisket. We're on a slow roast, a slow smoke, and we're gonna be primed and ready here. And that's what we're doing. We're just trying to get a little bit better each and every day. And by just showing up here, we do get a little bit better by being able to talk through these things, to work through these things, to see the change of characters, to be able to spot the structure and trade in that direction. All of these things are things that will compound our journey and our progress over time, or will compound throughout our journey as we progress over time is what I was trying to say. Yeah, so not a bad day. Break even day. That's a win to me. We were able to get some value. And then we were able to see the strategy work out for 2 trades and then one be a break even trade. But for 2 of the 3 trades, we did end up getting the volume, so no loss. Well, technically, I did lose a little bit because of spreads. So the spreads, I should have equated for the spreads a little bit because we're on this 1 minute time frame. This same structure could have happened on the 4-hour time frame, and we get taken out at break even for a true break even. But since this is such a small time frame, the spread you gotta equate for the spread. So I did end up with a slight loss, little baby loss, but it's just a break even trade in terms of how much we were risking, especially. So yeah, I appreciate you guys for tapping in. We will be back tomorrow and hopefully tonight. Okay, so let me real quick. What did we talk about that I wanted to see that we could potentially see for the Asian session? So a couple of things that we saw today that we were anticipating. That looks weird. Okay. One, for this candle to get its bottom wick and for that to get filled, skadoosh, we got that. We started rejecting immediately after it went to this level. And some would see this area and be like, why is price reacting off of this level like that? Well, all it wanted to do was to grab that bottom liquidity below that area, and it was free to fly. It was free to fly up, and so these are why we target these areas. These are why these are areas of interest. So what do we see happening now on the 1 hour time frame? Well, we got a breakthrough a low. Technically it's a change of character because price was creating lower lows and lower highs, skadoosh, and then it pushed up and it broke through these highs. So that would make the now structure bullish. If price comes to here and continues up, if price came to here and rejected off of it, it could continue up. But what happened? We broke through this low. Since we broke through this low, now we know that price is in the bearish trend still. We could see a correction and a continuation, or a correction and then a potential continuation to the downside. What did I say I wanted to see for this Asian session is for price to, I hope to come to there, but if it reacts off of here, if a 4-hour candle, our 4-hour candle closes bullish for going into that Asian session, then I'm looking for buys for that move, for a corrective type move to the upside. Something like this would be good. I want to get in on that next 4-hour candle and anticipate a continuation of that move to the upside. Likely I'll just, because we'll be on a smaller time frame with it, likely I'll just target whatever that 4-hour candle's high is that we're trading off of, I guess you can say. Similar to how it happened here, you can see we wanted to get in at this bottom wick right here for a corrective structure trade, and all I would have done is targeted this high right there, and you can see price went up and it targeted that high, and as soon as it targeted that high, it flipped off of that area, formed a correction, and then still did push up in the full correction. But essentially based on, and this is based on what time the 4-hour candle closes. You know what I'm saying? This is the start of the new daily, so we don't have a ton of volume at the start of, or not at the start of the new daily. This is at the start of the new daily of the new week. So this was the first bullish candle of the new week. You get that correction, and when was this? Was this last week? No, this is some weeks ago, right? Yeah. So that's 2 weeks ago. So this was before I was actually looking at no, wait a minute. Cause on Monday, no. I took a break even trade on Sunday. This was the start of, yeah, that was the start of last week. Yeah, so because we took a buy trade on Tuesday, that was a corrective structure trade that hit our full take profit within that demand zone on the 5-minute time frame, and then price had flipped to the downside. We got a 1 to 2 risk reward on that trade, and then yeah. So essentially, that's how I'm gonna execute for the Asian session, or I'm gonna look to execute. We gotta anticipate based off of what price closes, because if this closes down here, closes as a bearish candle, and then we get another strong bearish candle, and then Asian session we coming off of a bearish candle closure, I'm looking for a continued sell to the downside, and price still can go to our daily or 4-hour key demand zone here, which is what where we think price can go, following a correction. But if price flips off of this level, this is initially where I wanted to see our corrective structure flip for a move to the steeper move down, or for price to now start to be in that bullish trend, or continue in the larger time frame bullish trend, because you can see we are in a bullish trend. We're right now in a corrective structure. And what's important to note about a corrective structure, when you're in a corrective structure on a larger time frame, we're going to have sloppier markets. Where it's going to be sloppier. The candle action, even on the smaller time frame, is going to be choppier. But once we get back into an impulsive wave for the markets, something similar of this in the direction of the trend, we are going to eat. Let me tell you, in these market movements, we eat. And the correction of the larger time frame, it's a little bit market structure is a little choppier. You see this move to the downside, not quite a crystal clear. You kind of get another wave up and then another wave to the downside. It's not super crystal. You get some breaks of highs, of key highs. Not with the impulsive move up. You get a push up, you get a little push down, you get a push up. You get a little push down, you get a push up. You get a little push down, you get a push up. We will be eating every single wave within our session, of course, within our session. So session starts Sunday. This candle closes bullish. That's our candle. We looking for price to fill that wick right there, and that would have been our target. We get in here on a smaller time frame. This looks trash, but we would get in at the bottom of this and then look to target there. That target would have hit. Price would have continued pushing up. We would have came back for New York session. We likely had some news because price pushed with a little bit of volume here. But we would have seen coming into the New York session that the previous 4-hour candle closed bullish. All right, we're looking for buys. Boom, we get in on buy. Well, I would have had to look for a change of character, and our smaller time frame resistance it would have likely been within this area here. Or no, it would have been within this area. Okay, so let me just do it so that we can see it. So it can kind of make sense of what I'm talking about here. All right, let's skadoosh. All right, 4-hour candle just closed bullish. We're looking for buys. Where are we looking for buys from? All right, if I'm looking at this, and I don't know how the market, I know price is going to buy, so we do know that price does buy. But in terms of where it rejects and reacts off of, where could we see price go? All right, where are we at here? Okay, so price creates a high. And just roll with me here. It created a low, created a new high, comes back down, creates a low here, right? Breaks this high, and price really pushes up. It doesn't form any correction after breaking this high until we get way up here. So where does our key low, where's our technical key low? Our technical key low and confirmation candle key is right here. Sorry, I had lost it for a second. Why? Because this is our high, this is our low, high, low, new high, broke up, never formed a corrective structure. This candle closed bearish, but this is not a corrective structure. Price just continued pushing up, came back down. Now what do we see happen? Price comes here, it forms a change of character on this area, and then it starts to push to the upside. But where's my targeted area for our session? Okay, likely within here. Let's go for the first candle. We get that high volume news. And this is why I say I think some news came out, because at the start of this New York session, generally you don't see crazy volume like that. And what do we know about news? If this was a normal regular day, if this was a regular day, and this had to have been some news because you don't just get liquidity grabs, but if this had been a regular day, price wouldn't have, after this change of character. So you can't see it here. Let me see. Okay, boom. We tap into that key zone. That was our key zone, right? Price pushes up, pushes down, forms a change of character, breaks this high, and it breaks that high there. Price would have likely came back down to that area, but not break this low and then continue pushing up. But you know, when you got that news, you gotta wait for that news to hit, boy, because that news might hit you. You know what I'm saying? And then where is the actual entry after you have the news? On this 5-minute candle here, you got your liquidity grab, you got that 5-minute candle. You could do two things. One, or realistically, you can get in on a 1-minute candle. So within this 1-minute candle is where I would have took my entry. So first 1-minute candle after that liquidity grab. And this is, I'm not saying I would just do this. I did this for Tuesday's trade last week, I think is what we took that trade on. And then the previous 4-hour candle closed bullish. Where am I looking to go? Well, I'm looking to target back up to these highs in the direction of the larger time frame trend, you know, and that's where our target would be. And you let it go. Let's see here. Get a correction. Skadoosh. Continuation. And that's just how we gonna eat up. That is how we gonna eat up. And that's how I can tell just looking on the 4-hour time frame by how this 4-hour candle closed that no way, like even before I seen the liquidity grab, that this had to be some type of news that came out. And then when we dial down to the smaller time frame and we seen that spike to the downside with that with this 5-minute candle here that takes out this low, definitely was a release of some news. Yeah, see, this is our 9 o'clock candle. So as soon as 9 o'clock hit, news release, where you get that spike of liquidity for that. I think it was the 15-minute candle. Where was it? Yeah, this 15-minute candle there, you get the spike, the liquidity grab. Because in a normal market structure, we would take our entry within this area when price forms the bullish candle within this area and set our stops below this low. But it didn't even give that bullish candle. It didn't form a bullish candle at this area. It literally pushed directly through it. Where was the first bullish candle that formed, though, at this area was right here. Similar to the trade that we should have taken last week. Remember, we had that break-even trade on... No, Monday we had a good trade. Tuesday we had the break-even trade. So we had PMI news released on Tuesday of last week. And we got in before the news. And though price had pushed to our key level, and we got a good move off of our level, was able to move stops to break even, we didn't see that PMI news. It grabbed liquidity above what our key high was, even though we were at stops to break even already. It grabbed that liquidity, then moved to our take profit. You got to wait for the news and trade after the news and anticipate news to give you some type of liquidity grab. You know, similar to... did we get a liquidity? We didn't get a liquidity grab today, but we seen a liquidity grab happen last night on the Asian session. Where were we? This is 5 a.m. We're on a 1-minute time frame, so prices. Oh, right here. This before we got that high volume spike. So let me look at this. Hold on. What was I looking at last night? Cause I don't want to spit you wrong. Cause I could be in the wrong. Oh, right here. So we had grabbed liquidity. Okay, yeah. Okay, so I have to see it. This is tedious. Okay, so okay. Here we go. So price is creating higher highs and higher lows. It pushes up, creates that high. What did it do? It came down, grabbed liquidity below this low here, making a steeper retest. Now this was our key low. So as long as this low doesn't get broken based on a larger time frame, the price is still in a bullish structure. The previous 4-hour candle did in fact close bullish, but then we got this this liquidity grab after. And then what happened after that liquidity grab? This was the first bearish candle that, or bullish candle that closed. After that liquidity grab is where you want to get in your entry. You take yourself a long position after that candle, and then you set your stops below the larger time frame low, which would have been here. I mean, you could set your stops realistically below the liquidity grab in and of itself. Why? Because price just grabbed liquidity down here. So this is likely going to be the lowest point that this goes, because it really just wanted to push below this low to take everybody out. Market movers do this. And that's why a lot of times when we have high volume news events, there'll be, liquidity grabs. Last week for NFP, we had a spike up, or spike down, a spike up, a continuation on the spike just a little bit, which is what we traded, and then price pushed all the way back down for that session. That happens with those high volume news events. You start to see things of that nature begin to happen. So something to look out for, something to be on the eye for. But yeah, I appreciate you guys for tapping in. I'm 35 minutes past where I thought I was going to be. It's because I love this, so I don't mind sitting on here and talking to the charts and the markets with you guys, because I love trading. I just genuinely enjoy this, the good and the bad. I think trading makes you a better person. It forces you to identify certain flaws, whether you're fearful or you're greedy. You can't take impulsive moves. You have to practice patience. The biggest thing that sucked in the beginning of my journey is, and you guys, it may seem like I'm patient now, but I had very, very little patience to wait for a setup to actually execute, to wait for a trade to actually hit, take profit, and so I was taking a lot of entries that didn't abide by my system at the time, just simply based off of not being patient to wait for my entry. So it forces you to be a more disciplined person. And then you start to see in different areas of your life where that replicates. My dad always says, how you do one thing is how you do everything. So the first thing he says you should do when you wake up in the morning is make your bed. And there's literally a book that says make your bed, and it's talking about how it's the first task of the day that you need to do to win the day, to set yourself up on a good day. You get out of bed, boom, I already did something good for myself. And then that discipline leads over for me to be a high value individual that I see myself in the future, the person that I envision myself in the future. What I'm going to have to do is I get up early and go to the gym and work out. We gotta start living like the person that we want to become. If you're gonna be a millionaire trader, a multi-million-dollar trader, you gotta think, how does the future me react to this situation? Would the future me close trades early? No. Why wouldn't the future me close trades early? Because the future me knows that this is likely where price is going to go. That's what the system and the plan set up. And the future me is just executing the system. The future me has no emotional attachment by any means to the trade, the idea, the directional bias. He doesn't have no emotional attachment. He literally just sits down, he executes the trade, and to the point where it almost becomes boring. Trading has to get to a point where this becomes a boring thing. And I enjoy, trading is boring by yourself. I enjoy sitting and talking about it. So that's where, it won't become boring for me, because I just like sitting here talking the charts. But the future me, he doesn't execute like that. He doesn't take profits early. And I will say that the biggest thing that has helped me is doing these live streams, having these things, because if I'm sitting in front of you guys, there's no way I can't not execute by my strategy. I can't take a trade on stream that doesn't execute by my strategy. And why is that? Well, I can't justify taking the trade. If I can't sit here and justify to you guys why I'm taking the trade, then I probably shouldn't be taking that trade, right? But there'll be other times where in the past where I, will look at it and be like, there's no real reason for me to get in this trade right now. But you know what? I got a good feeling that this could happen. And we're not going off of feeling. This system, there's not one rule on this system that ever said, trade how you feel. When we go to the, hold on, I got to pull it up because, it's important. It is important. So let me see. Oh man, I deleted it. Hold on. Give me 2 seconds. I promise you we're going to end the stream. I'm not going to stay here forever with you guys. I'm not going to hold you guys forever, but this is important, you know. Website. I'm just going to title it website. Forget it. We'll go. Oh, wait. I don't want a website. All right, we already put it up here, so we're just going to do the website. Properties. Copy and paste. Give me 1 second. This will all make sense in a second. Copy. This is why I normally have studio mode on, so that it doesn't just, oh man, nah, okay, we're not doing it this way then. If it's going to force me to log in. Now my computer is freezing. All right, well, we're having technical difficulties for sure. Okay, hold on. Stop freezing. Let's remove this and let's add just a screen capture. We want the Mac OS screen capture. Yep, cool. Nope, don't want a screen capture OBS. Want a window capture. There we go. Sorry. All right, there we go. And normally I have this up, but I had to delete it because I was trying to see if that was what was playing the video in the background for the stream, so that you guys wouldn't be hearing that stuff. But where in the strategy does it say go, execute based off of a fill-in? Check my FX book, trade the session, identify 4 hour, dial down to a smaller time frame, wait for key zone. Nowhere in the strategy does it say to react off of how you feel about a trade. None, and you can't replicate feelings. What we can replicate is everything that happens in this system. Everything that happened today that we were looking for on the charts wasn't because I had a feeling it was going to do that. It's because based on how price moves in the market structure, these are different things that we could see happen. You know, these are different outcomes that we could see that could be plausible. And it didn't happen haphazardly. That's the whole purpose of the system. How you develop a system is, for one, understanding how the markets move. And I remember seeing early on in my journey, there was something that said there's one thing to trade a strategy and there's another thing to trade how markets move. Are you trading a strategy or how markets move? Is your strategy to trade how markets move? Or is your strategy just, you know, I have these set of rules and this is just what I trade? I developed a strategy to where I can, for one, I spent all of my time just literally going through the charts. So when I didn't know what was going on with the charts or on the trades, you can see that take profit get hit. Hold on. Let's talk about it. Let's talk about our re-entry for today that we were looking for. What happens for the re-entry on the 1 minute time frame? Our take profit got hit. Why did we set our stops down, or why would we have set our take profit here? Because this was a continuation trade. What is the continuation trade? It is on our rules. Everything that we do and we execute by is written in this paper. Is written on it. Is written on it. We continuation trade. What do? We set our take profit for the break of the low or the high. So when I get in on my trade, I'm not looking to be emotional about the trade. I'm looking for that continuation, because that's what the market structure does. It's one thing to trade a strategy. It's another thing to trade how markets move. Why do I set my take profit for the key supply and demand zone if it's a corrective structure trade? Because that's where price will flip off of on a corrective structure, when forming a corrective structure. That's where you start to see those continuation plays. We trade those continuation plays. You know what I'm saying? On the smaller time frame, we would look for, like, essentially today's trade was a continuation trade. In a different session, we could be looking to take the corrective structure. It just depends on where we're at in the session, on where markets are at, what type of wave are we in? Are we in the corrective wave, or are we in the continuation wave at our session time? And then we just trade whatever that wave is. But why I made the rule to, you know, take my profit at supply and demand for a correction trade is because I would get taken out. There was times where I wasn't moving stops to break even, or I wasn't taking profits on these corrective structure trades, and I would get taken out. I told you guys last week on Monday, my brother was taking a corrective structure trade, and price had reached that supply and demand. You know, he executed properly, got in the right entry, moved stops to break even once he got some volume. This was the only thing was the problem with his trade. He was trading it as if it was a continuation trade. So he was looking for a break below the low at the time that EU was selling. So he was looking for a break below the low. If he would have understood what wave he was in as far as it being a corrective structure trade, mind you, on the smaller time frame, we already had a change of character. So it was a clear sign that this was a corrective structure trade for a potential continuation to happen, and he ended up getting taken out at break even. And then we talked about it after, and then I mentioned to you guys on stream after that Monday that oh yeah, I'm not on the chart. I'm not on the chart yet, so I'm just sitting here talking to y'all here. I can move this though because it's not important anymore. But and thank you for reminding me, because I'd be slipping up on it. I took studio mode off so that I don't have to transition over, so I could just open and close. But I definitely appreciate that, because I don't want to sit here and be talking to you guys the whole time you can't see. But and I guess since we're here and we're talking about it, let's see if I can't find it real quick, the entry and the trade that he took. It was, oh man, let me see. It was that Monday. It was before our session had started. So I think it was within here. So let me move. Let me do this, and let's go like this. This is the move that I think he was taking to the downside. So let's go back onto the smaller time frame. All right, so yeah. Oh no, he was trading within this wave. So you can see he traded within this wave, and his entry was in here, on the smaller time frame, on the like 1 minute time frame. That was the entry. I think it was based on, was it the 1 minute or 5 minute? He's not here to be able to tell me. Oh no, it was based on the 5 minutes. So this was his actual entry. So he was waiting for price. It was in that corrective structure. What do we have? We had an impulsive move up that broke for a new high. So we're in a bullish structure. What are we seeing now? Price creating lower lows and lower highs. This is in a corrective structure though. So it was a corrective structure trade. He took his entry here, set his stops above his resistance here, right? And wanted to see price come back down to break this low. That was his trade. And so he started to get some volume on his trade. Boom, price is moving down. He moved stops to break even. Perfect execution. Where he went wrong was not identifying that this was a corrective structure trade and not a continuation trade. And so where he should have been looking to take profits is right here at this candle. Why this candle? Because this is the demand candle that started for this continuation push for up there. And if he closes his trade here, he gets his 1 to 3 risk to reward and doesn't end up with a break-even trade. And what happened after that? Well, price began to, push down. This is where we took our trade that last week. I got on the continuation move for price to continue pushing up. I got in on that first 1 minute candle. So that first 1 minute candle within our session, this was my trade here. I set my stops safely below this low, and then I was looking for price to go up. And I have a breakdown video of this trade. The live recorded session is on my Instagram, day 1 of the trading journal, trading diaries. But my trading journal, day 1 is on my Instagram account. So you'll see this trade because I put a snippet of the actual live stream from the trade in the video. So you'll see that we executed on this trade, and when price came up into this area, it was showing signs of rejection. So I did close 90% of my trade after price formed this candle here, because I didn't want to see a steeper move to the downside to break this low. And I think price had made one more push up, which our overall target was just to this high, right? So this was my target. This is the area that I wanted price to go. Price, yes, can continue because this is a continuation trade up here, but my target was just for price to reach this high. So I had closed 90% once we started rejecting off of that area. And then what happened? Price went up, got to that high level, formed a correction, and then it pushed up, got to that high level. I closed the last 10% of my trade there, and then we started to see a steeper move to the downside, I think, begin to happen. And let's see if price went in fact and broke for this high. I know it didn't happen within my session time, but let's see if we can speed this up. Let's just see. I think it made a steeper move down, but as long as it doesn't break this low here, price is still bullish to break this high. So let's see what happens, or what happened. I think we got another rejection off of here, because my brother was still holding his trade, and then he closed it there, and then it started to reject again, if I'm not mistaken, because he was in on that buy trade with me, and this was around like the Asian or the start of the new daily. Yeah, you start to see that move to the downside. He closed it there, and let's see. Can we go to the 5-minute time frame? This is agonizing. What happens? Our kilo still hasn't gotten broken, and kilo gets broken. So price didn't even go up. Then get a change of character, and we started to look for sell moves to the downside. So that's it for this session, though. So I appreciate you guys tapping in. So I know I need to learn without indicators, but I have been looking to see how accurate and smart money concept looks algo is. Listen, I'm not gonna lie to you, and I made a video on it. You don't need indicators. Indicators don't do what people think they do. Because the word indicator in itself makes it seem like it can predict where price is supposed to go. And indicators don't do that. Indicators are actually lagging measures of price action. So in order for an indicator to move, it has to first see what the price action does, where price goes, the ups, the highs and lows that are created. And then it calculates for that for the indicator to do, you got so many different indicators out of there, and it can be a lot of traders get stuck into that loop of looking for what's the best indicator that's going to tell me when to buy and when to sell. The best indicator is these right here. They're called EYES. That is the best indicator to have, because price reacts off of structure. It doesn't react based off of an indicator. Like I said, it's a lagging measure, but it's based off of structure. That's why in the strategy, it's not based on feeling. The strategy I got up is not based on feeling. This is all structurally based, and indicators are a lagging measure of structure. We could be waiting for our entry and the indicator doesn't show it, but the structure is showing that it is time to take our entry, and then you wind up missing the entry, or you become too reliant on the indicator, and don't get me wrong. I'm not saying that, indicators can't necessarily help you, especially early on, to identify certain directions and things of that nature. I'm not saying that that's the case. I haven't spent a lot of time with indicators, and I simply haven't spent a lot of time with indicators simply because I'm in this system, not just me. This system is a proven fact that you don't need them. You just don't need them. And what they do is they tend to block up the charts, and it becomes harder to see the price action that you do have on the chart. And so realistically, the system, and I'll send me a message on Instagram. I want to send you the system. At least I sent a screenshot actually to the Telegram, or the free Telegram. So the system is in there, and then I didn't put the risk management, but risk no more than 1 to 2% of the account balance per trade. Realistically, you want to be at a 0.5% to 1%. Realistically is how I go about this. So not a 1 to 2%. We're gonna go a 1% at max. That'll be the max that we look, and then a 0.5% at on a trade that may be not so beautiful price action. Like today's trade, I took at a 0.5 instead of the 1%, because the price action just wasn't the best, and we did end up with the break even for that trade. And if we don't move stops to break even, that trade would have resulted in a loss, which would have been bigger than what we imagined, or bigger than what I would have wanted to risk. And then you set your stop loss to break even around that 1-to-1 risk to reward. So this system has everything within it that you need to be successful in the markets. And I'm telling you, if you can get a grasp on and that kind of goes back to what I was saying about trading how the markets move versus trading a strategy. A lot of times, that's where the difference lies. And so the best thing in terms of the best indication of, or best indicator, is price action. And that's simply understanding. You get more value out of understanding how candles move and how they close. Like, how did I know that the 4-hour will likely be a bearish move to the downside today, because I knew that the previous 4-hour closed bearish. What can I expect this next 4-hour candle to do? Well, it can retest. If we don't have news, you generally don't see liquidity graphs, but it can retest and then make that steeper move to the downside because it has to form that top wick. And where do I want to get in at? Somewhere within that top wick. And then, set my stop loss above resistance. Resistance is there. For price to continue pushing, whether it's a continuation or corrective structure trade, for that move to the downside, at the very least to get a feel of the previous 4-hour candle, especially since this is the first 4-hour candle that closed bearish after an impulsive big move to the upside. If this closed bearish, similar, it's the inverse of what I was talking about this right here. So it's essentially the inverse. This candle closes bullish, and then you get that bottom wick right there, and then that continuation play to break through there. It's the same thing inverted. It was the first candle that closed, which would be in this candle, and you can expect to see that move to the downside. When we was looking at the 4-hour candle, we didn't get our high volume trade move. We looked at this 4-hour candle. Okay, 4-hour candle closed, and we mentioned this beforehand that we can trade the next 4-hour candle because it will likely do this. So to understand price action and how candles move, how they form, and how this system works around that to make us get these high probability, like when I say the system, very rarely you take, if you abide by the system, trading in the session time, very rarely. I don't think I've really, I hate to say this because I haven't been able to show the data because it's taken me so long to just abide by the system and not close trades early and not trade outside of the system. But I haven't seen it lose. I have not seen it lose. And I've tested this over and over and over and over again in any different market structure. Like, it doesn't matter what markets it works. It just works. And I haven't seen it lose. And it has its own invalidations. If price, there's things that can, once we get into the trade, how we manage the trade, even that is a part of the system. Like, today's trade could have easily been a loss, but we were able to manage that trade and protect ourselves from that loss. But it's a part of the system. So generally with any trade in this system, it's either gonna, like, and I hate to just say this but I'm gonna prove this with the statistical data over the next year, so that I can have the data to prove this. But I have not seen it lose. It's generally only a break even or take profit. That's it. Anytime I lose, it's generally my fault. Like, the 2 trades that we lost in the past 2 weeks were my fault. The first one, the 4-hour candle had closed bullish and I was looking for a sell. That's my fault. Should have been looking for a buy, right? And then the other one that we took, which was not last night, but Monday night, was well outside of our session time. And within our session time, we seen that the actual trade should have been the corrective structure trade or the corrective model trade. And what we were looking at and what I stayed up for is to see if we can get that retest, to see if I could get the continuation trade. But the continuation didn't even happen. It was the corrective structure trade within our session time. And why I lost is because it was outside of my session time for that move there. And so that's just what had happened. And let me see, price. And so this was the area. So this was the area that we were looking for price to now. Where was we at? Right here. I was looking for a retest and for price, but on a smaller time frame, price could go up. And for a continuation to break the low, I had to wait a long time, and that whole time price is just forming this corrective structure that was the trade where we should have bought. But I told you guys that it just was so little volume that my trade stop loss had to be like 0.07 pips. That's why I was like, nah, let's just wait for the continuation play. But what happened? By the time we get there, we're out of our session time, so there is no opportunity. This system is so specific and so, like, it works, but it has to be, everything on the system has to align in order for this to work. If anything is out of, last week we took the L because we didn't do rule 3. This week we took the L because of rule 2. And like, if you abide by the system, and I'm talking like this is the holy grail, this works. And then from there, and I gotta add on to it how once we get into our our trade, how to, modify stops to break even. Like I should put this set stop loss to break even. I want to run risk to reward below this. So it'd be rule number 8. Yeah, let's just do it. So we're going to copy it. Put that there. And then we're going to go from here and we're going to do this. And we're going to paste it. All right, so this is the rule 8. This is the new rule 8. Let's move stops to because this is how we go about managing our trades. And then after that, that's it. As long as you abide, and it's called, and I have a name for it, for the culture, ace trader strategy is what it's called. And what an ace trader is we anticipate first. A, we anticipate. C, we wait for our confirmation. And E, we execute. But we have to first anticipate what's going on, and that comes with identifying what the 4-hour direction is, dial down and anticipate our price to get to our key zone. Then we have to wait for a retest of our key zone. After that, this is our confirmation. We get our confirmation. Our signal candle is our confirmation. That's the C. And then we execute. And what does execute mean? It means doing this part properly. Not closing, or not this part, but this whole part down here, this whole thing, this part correctly. You want to set your stop loss safely above or below the resistance area of the key zone. You could do the key zone. You could also do the candle. The candle is more risky, but we do the candle in the retest area. There's different types of trades that we take, but essentially this is the base bone, and this is the skeleton of our system, the basis of the system. And then you move your stop loss to break even at that 1-to-1 risk to reward. And then based on if it's a continuation trade or a correction trade, you let it go to whatever the take profit is. And so in order to be an ace trader, we have to abide by each of these different things. Like any one of these things being off is liable for us to result in an L. And so it's like, and like I said, when we abide by everything in here, I rarely ever see a loss. I'm telling you, any loss that I generally take is my own fault. Like that's generally what it is. It's my own human error that either last week we had a break even trade that shouldn't have been a break even trade, but I didn't do rule number 1. I didn't check for the news. And it ended up being a break-even trade. And if I would have waited for the news, then it would have been a trade that hit full take profit. Then what happened? There's just the system. It works, and it works so well. And it's taken a long time to understand how to, and it's had some updates and upgrades because there was a different way of capitalizing that I was doing. I used to it, and it had levels of development, but doing it this way, I've never seen it. I have not seen it lose. It's almost guaranteed that instantly when you take your entry, you should start to see some volume in the direction in our direction, like almost immediately. Generally, we don't see too much of, if any, drawdown with this system, and then you get to that 1-to-1 so quick, and then you move. Sometimes I'll take a trade, and then after I take a trade, I'm like, all right, I'm moving stops to break even. My brother like, man, already? But it'll happen that quick. You'll get that volume that quick. It could be just like that. And so we gotta abide by the system. Any wrong move outside of the system, it can result in an L, which means it's not worth it. To me, it's not worth it to take a L, and I say that, but knowingly traded outside of my session on, Monday. But what happened? It resulted in an L, and these are things that, I'm human. I'm not perfect. I'm going to make mistakes. I have a system, and even with understanding how the system works in and out and have created it, there's still things where I make human errors. Today we didn't take the first trade because the price looked kind of weird in terms of our structure as far as how the candles close. So there are certain things that, even though we do have this system, it's just the bare bones to the system. Like the the things that must be done in order for us to even have a shot. You know what I mean? And if you do, I'm telling you, chances are good. The win rate on the strategy is it. I haven't, man. I want to say that I've seen it lose. The only time that I've seen, things that is like things that I should have accounted for, like PMI news last week. We entered off of the system perfectly. Didn't know about the PMI news. You get your liquidity grab with the PMI news, then it goes. I didn't know. But I also didn't abide by the system perfectly because I didn't do rule number 1. I didn't check for news because I would have known we had news, and then we would have did what we did today and waited for the spike of the news and then trade the volume following. It's not the system, it's me. You know what I'm saying? And I'm not perfect, but we'll continue to get to that level to where we execute at a high level. I mentioned in the Telegram yesterday that of the trades of the past 2 weeks, of all the trades that we taken, I think it was like 11 trades, something of that nature. It was supposed to be a $28,000 profit that I would have been at, and that's not including today's trades and setups. Now, if I abide by my rules, we don't take any losses. So we took only 2 losses. But if I abide by my rules for those 2 trades that we lost on, we don't lose. The one trade, and realistically, within that session time, the trade that we lost on this week should have been the corrective structure trade, and we should have traded that, which happened in session. You know what I'm saying? So that would have been the move, and then now we turn a losing day into a winning day. I think the trade conservatively with a 3 pip stop loss, not that 0.7 pip stop loss, would have ran a 1 to 2.5 risk to reward. So instead of now having a loser, we have a winner. And then last week, the loser was that I was just simply on the wrong direction. The previous 4-hour candle had closed bullish, and I just didn't identify that. And that's rule number 3, And don't get me wrong, if the 4-hour candle had closed bearish, my entry model where I entered, waiting for all of this stuff, all of that was cool. All of this worked perfectly, would have worked perfectly, right? The only problem was rule 3. If it had closed bearish, then we move to the next step. But you can't do the next step without doing the step before it. So first we have to check my FX book. That's the first thing you do, right? And then we only trade. Well, I mean, these 2 are interchangeable, but so really the first thing we would do would technically be only trade in New York and Tokyo. So that's technically rule number 1. Then you get into your session time. Then what do you want to do? You want to check for the news for the sesh. You know what I'm saying? Yeah, this is definitely rule 2. Okay, there we go. So then you want to check for the news of the sesh, right? Then after that, all right, cool. We don't got no news, or we do have news. Then we would, if depending on what type of news event it is, well, depending on if we're taking a high volume news trade, like what we've seen was going to play out today, and how we took NFP. That high volume news has its own set of rules. It still abides by this kind of structure, but as far as identifying your key zone, price likely is not going to go to your key zone because there's just so much volume, so you can't wait for it to retest that area. It's really after a corrective structure starts and the first candle that closes in the direction of of where the spike of the volume following the correction. That's the entry, that's the stop loss. And then take profit is the same. You would do the continuation trade, take profit, because we have high volume. It's likely that you continue in the direction of whatever the volume is, similar to what we've seen today. But nonetheless, you identify that 4-hour, and then you go to the next step. Okay, 4-hour just closed bearish. What am I looking for buys? All right, cool. Now I'm dialing it down to my smaller time frame. Well, where's the zone that I'm going to look to take my buy? All right, boom. All right, found my zone. Now what do? I got to wait for my retest. Okay, I just got to sit here, And then it's next. Okay, we got to the retest. Do we get the signal candle? When we get the signal candle, I'm taking my entry. All right, boom. Next step, I got my entry. What do I do after that? All right, I safely set my stop loss above or below resistance. If I'm taking a sell, it's going to be above. If I'm taking a buy, it's going to be below. Boom. The key zone, whatever our starting identified key zone is, that's where you set your take profit. for a full correction, unless you're taking a retest play like we were looking for today because we have high volume. This is for normal market structure. I'm not talking about a high volume trade. We're talking about normal market structure. You set your stop loss above, below that key zone. Boom. Once the trade, and I'm telling you, when we do all these steps right, generally when you get these trades, you get instant volume almost instantly. It's very little drawdown generally. And you get instant volume to get to at least about a 1-to-1 risk to reward. And then you go ahead and you move your stops to break even. Once you get the stops to break even, there is nothing left for you to do but to decide whether it's a continuation trade, which is going to be decided before then, or if it's a correcting trade. When you take your entry on the trade, you'll already know if it's a continuation or a correcting trade. And you just set your take profit and let it get hit. Let it get hit. If we do that today, and we get our scale in trade that we was looking for today, our take profit gets hit. It gets hit. So of the trades that we were looking for today, we had 2 trades that just go straight to take profit. And the one trade that we took on the retest play was a break even trade, And so the system works. Oh my goodness, the system works. And if you can learn how to put this system into play, you feel me? You got the continuation trade at the retest zone, you know what I'm saying? And let it do. And my fault was not taking that entry after I said I was going to put another 0.5 on it. That's my bad. That's me. These are areas where I got to improve to be a better leader so that we can take this trade and then continue to, we take that trade. It's essentially a scale in trade, because how we see this is, let's say we were looking for, we didn't close profits here and we let price pull all the way back up. We wouldn't have done that because the system says to clear here. But essentially, it's a scale in for the continuation move. We talked about how we can get our initial trade, and then after our initial trade runs to take profit, generally you don't want to see a full pullback up here. We can take another scale in trade at a reduced risk for the continuation of the move to the downside. And since today's trades were scale in trades, because this was initially my real entry that I was going to put 1% on, this was a scale in trade 0.5%. This would have been a scale in trade 0.5%. That's why I had said that earlier. So here I am now, an hour later. We was going to get off at 10 o'clock. It is 11:11. But all of this stuff is important, and I love sitting here and talking about it because it's helpful for me. Even if it was nobody sitting here and I'm just sitting here talking to myself, this is helpful for me so that I can improve. Because at the end of the day, trading is a solo journey. Yes, we can do it with other people, but it's your own individual that you have to progress and continue to try to best and better, And so by showing up, just even trading live for these sessions, for a while I wouldn't trade live because I felt like there was some pressure to, being live stream and trading and things of that nature. And what I noticed after getting on the other end of that is that I'm my most calm in my trading when I'm on stream. like when I'm on stream, because I can't, like I said, I can't do things that don't abide by my rules. I can't, be impulsive or emotional on my trades, because then that's something that you guys see, and that's something that my future self doesn't do. So when I get onto these sessions, I get to put on my cap as if I'm already my future self and act as if I was already him. And that's how you get to being what you want to do. You got to do the things that person that you see yourself doing. And it talks about that in this book right here, Your Next 5 Moves by Patrick Bet-David. Your Next 5, I think it's Business Moves. Master the Art of Business Strategy. That's what the book's about. But it's talking about just in your company, you have to execute like a high functioning company, do the things that a high functioning company would do, because when you get there, that'll be just your standard. This is just the standard to be this level. You know what I mean? And so these sessions help me as well. So I appreciate you guys for tapping in. I know I said that about 10, 20 times. I haven't eaten anything at all today. Been up since 5 a.m. It is currently 11:13 and I need to eat something. So I'm going to get up off of here and we'll see you guys tomorrow for tomorrow's live stream session. I hope you guys got some type of value out of this. There's so much that gets talked about in these sessions that I think is just so truly important, and that I want to start seeing, I want you guys to start being able to reap the benefits of this hard work that you're doing, of showing up to these sessions, to, you know, to see the profits, to become funded traders, whatever you're doing, whatever your goals are, to be able to accomplish it from being actively on these sessions. And there's so much that you learn. Today we talked about, again, we was able to recover or go over how to execute on a high volume trade. You know, maybe we'll have a session where we're executing on a low volume trade. There's different things that you do on low volume. You got to dial down to the, well, how we execute on high volume and low volume is actually quite the same, because you got to dial down to the smaller time frame. On the, if price isn't moving anywhere, then you got to dial down on the smaller time frame to see that structure, to be able to trade that structure. And if price is moving too fast, then you can't even see the structure that's getting formed. So you got to dial down to the smaller time frame. But yeah, so how we execute off of those trades, how we should execute, because we didn't get it, and it hurts me on the inside to not have executed on these trades, because there's such great moves in there, in the social proof, and then building up the, you know, because it's a confidence thing as well. You know, it continues to refine that confidence in the system and in the strategy, and, you know, you just come back and you execute. You come back, you execute. You come back, you execute. So today is just one day out of many a days. We were able to have 3 good setups, 2 break even, 2 take, or 1 break even, 2 take profits, and, you know, we'll be back tomorrow. So I will see you guys tomorrow.